Good morning, everyone. Welcome to our special meeting of council here for Wednesday, April the 22nd. Starting with our land acknowledgement. In the spirit of respect, reciprocity, and truth, we honor and acknowledge the Mokitas and the traditional Treaty 7 territory and oral practices of the Blackfoot Confederacy, Siksika, Kainai, Piikani, Likal, Nakota Nations, Chiniki, Bearspaw, Goodstoney, and Tsuut'ina Nation. We acknowledge that this territory is home to the Métis government of the Métis Nation with Alberta District 4. And finally, we acknowledge all nations, Indigenous and non, who live, work, and play on this land and who honor and celebrate this territory. This sacred gathering place provides us with an opportunity to engage in and demonstrate leadership on reconciliation, and we are honored to have you join us on Treaty 7 territory. This morning, with it being a special meeting, there will not be opportunity for any additions to the agenda, just with it being a special meeting. So can I have a councillor make the motion for to accept the agenda, please? Councillor Randhawa.
Thank you, Your Worship. Good morning, everyone. I move that the Council approve the April 22nd, 2026 special meeting of Council agenda as presented.
Thank you. Comments, questions from Council? Call for the vote. Councillor Warzanowski, do you vote in favor? Councillor Warzanowski, can you hear me?
Yes, yeah, sorry, it's on. I have two screens here. I couldn't find the window. I vote in favor, yes. In the future, I will raise my hand when I vote in favor.
I can't see you. So, and as per our procedural, I believe as per our procedural bylaw, when someone is attending online, that they need to be voting verbally.
No, I know you can't see it. I was going to raise my hand with the emoji, but that's okay. I can vote verbally. No problem.
Okay. Thank you. Okay. With that, so I do just want to make note that Councillor Warzanowski is attending virtually here this morning, and Councillor Narayan, Deputy Mayor Narayan, I apologize, Deputy Mayor. Deputy Mayor Narayan is still with his exams at his other role. So with that, I'm going to move to point 3 with Board of Directors, which is 3.1 for 1538974 Alberta Limited audited financial statements. I see that we have a guest which is being presented by Hisham Adabi, partner of Adabi Professional Corp, but I don't see that. Oh, the talking head is waving at me. Yeah, Mr. Redney.
Yeah, thank you, Mayor Dean. Good morning, Council. As mentioned yesterday, our first item today we're going to do is receive the audited financial statements for the utility company, and we're going to ask the Board of Directors to approve those. The reason for this change in process a little bit is we need to have these completed so that our auditors can finish the city's audit to bring those audited financial statements on the 28th. So our presenter is here now, and we will be ready to move forward.
Do we need to take a quick recess to make sure everything's set up? Should we take a quick 5 minutes just to help our presenter get set up and do that? Okay, we'll take a quick recess and we will come back at 9:15. Thanks, everyone. Good morning again, everyone. We have everything set up here and now ready to go with our guest presenter. So again, we're going to be starting with item 3, Board of Directors, 1538974 Alberta Limited Audited Financial Statements, being presented by Hisham Adabi, partner at Adabi Professional Corporations. Good morning.
Good morning. Good morning, Mayor, Honorable Board, and Honorable Council. My name is Hisham Abadi. I'll be presenting, I did the audit for the utility company, and I'll be presenting high level the finding and also the main point in the audit financial statement. I will start by saying that the audit didn't find any material misstatement in the financial statement. So we're gonna issue a clear opinion for the audit financial statement. So that's the main point here. So that's the independent report here that we will not qualify. It's unqualified opinion. So on a balance sheet, there is no major changes from last year. The cash and the cash flow is almost the same. There's more account receivable this year than last year, I believe, because of we have more residents and more client into the system. The other point is there was for the property and equipment, we have more. There's about 30% increase due to the development in the city and more contribution from the developers. On the other side of the liabilities, basically we're still paying that debt with TD Bank, and we have more different revenue again because it's related to the developers' contribution to the city and the growth of the city. Any questions on the balance sheet?
Councillor Sandbo.
Thank you, Your Worship, and good morning. This question through you actually might be for Mr. Edney. I'm looking at the restricted cash and understanding this is the numbered company. How is cash transferred for OSL? Does it sit in a bank account for the numbered company until it is spent, or does it hang out in the city's accounts until it's transferred?
Mark? Okay, yep.
Morning, Council. To answer that question, yes. As I showed you yesterday, is the cash for the offsite levies is sitting in the city's books initially, and then when it gets transferred, when the assets gets transferred over to the utility company, it moves into that as a deferred revenue, and as that asset gets amortized, then that revenue associated with that asset gets recognized, and the expense associated with that then at the same. So the net effect of that is basically zero, if it makes sense.
Councillor Sambo.
Thank you, Your Worship, through you. So what am I looking at with the restricted cash here? Note 4 says that corporation holds funds that are restricted, including offsite levy amounts received from the city of Chestermere. So that's cash restricted received from the city for OSL.
Yes, and there would be an obligation associated with those specific funds on that line there. But the biggest portion on the deferred revenue relates to the assets that are actually being transferred.
Councillor Sambo.
Thank you, Your Worship, through you. Can we have an explain like I'm 5 moment? So I'm just not understanding. Does the city spend the OSL money and transfer the asset, or does the city transfer the cash and the utility purchases the asset?
Mr. Skonkin.
Thank you, Mr. Chair. Yes, the bulk of the offsite levy funds that come in comes into the city. And then when the asset is constructed, then it moves over to the utility company, okay, as the deferred revenue. The agreements that exist between the city and the utility company actually states in there that 30 days after the offsite levy, 60 days after the offsite levies cash has been received, technically speaking, the city was supposed to transfer over those funds to the utility company. So that's why you will have, from a historic point of view, you will have still some of that. But the practice in the last few years was the city holds those cash, manages it, and when the asset was constructed, then it would have been transferred over. So that's why you have a little bit of a mix match. But like I said, the vast majority of those items are sitting after when the asset has been transferred over to the utility company.
Councillor Sambo, you're good? Okay, I see a thumbs up. Okay.
Any other questions?
Any other, sorry, thank you. Any other questions or comments at this time from council? Thank you.
So we can move on to the statement of operation. The main, so we have more income coming in due to, again, most of it was from the levy side and from the sales of goods. On the other side, we have almost the same expenses. So this year we have a net income of $2.8 million. I think the utility is getting more handle of the expenses, and I believe we're gonna be on a more positive side for the next couple of years. Any questions?
No, I think we're good.
Okay. So this is just a change of equity. There is absolutely no changes. Oh, sorry. So, and this is the cash flow statement. This is just to explain how the cash is developed in the 1.5, the utility company. Again, majority of that is the deferred income, as Mark said and explained. Any questions?
Seeing none? Nope.
Okay. I don't know if you have a chance to go through the note, but if there's any questions on the note itself? Mark, anything you want me to highlight on the note?
I think too, council may just need a moment as council received this morning. So I think council may, so if there's a bit of a pause in between where council's kind of looking down and not looking up necessarily, I think it's just because council's doing a little bit of reading while you are presenting. So please don't take our scrambled up and down looks here as any disrespect here to your presentation.
No worries. The other point I want to point out, I think I'm gonna highlight three main points on the financial statement, is we are respecting the covenant of TD Bank. So that was tested, and there's no issue with that. I think is an important aspect of it. And again, on the internal controls that we tested, there is few minor things that we need. We will work with Mark to correct it, but there is no big major ones. So I think we're satisfied with that. And the third point is that I think the swaps is working as need to be done. So I think we are gaining on the how it's done to protect the interest rate from variation of interest rate to make sure that the utility is paying the least possible interest.
Thank you. I guess to administration, I would have a question as well, and this is one of those questions where our electeds may already know the answer, but I think it's good for our public to just know with regards to timelines and things like that. What are the deadlines for filings for our audited financial statements when it comes to say the utility company as well as for the municipality? So I'm just wondering, just in terms of timing, as we're seeing this here this morning, and comment that I made earlier, I believe I'm going to be turning this over to Mr. Skonkin, but if you could just help us have an understanding of that with regards to timing and just help our public with that understanding. Thank you.
Thank you, Mr. Chair. The situation that we have in terms of the city's year end is that because the utility company is a subsidiary to the to the city, it reports into the city's financial statements. So the utility company has to submit its financial statements before the city can approve those, and then and the city is under a tight deadline to have the financial statements submitted and approved by the end of April each year. So the 1st of May it has to be in already, and that is why there's a bit of a slight disconnect between the utility company's audit and the city's audit itself, and we're hoping that we could maybe do both of them at the same time. The city's auditors had indicated to us now that if there's a hiccup, then we would be late in terms of filing the city's financial statements, and that we don't want, because then you have to report to the minister as to why you're late and so on. So the drama associated with that would be more significant. So ideally, we would have the utility company's audit done quite ahead of time, quite a bit ahead of time, so that there would be enough time to get everything. However, this year the audit timeline moved closer to what we wanted to be ideally, and it is something that we will have to correct going forward as well.
Great. Thank you so much for that explanation. I think that's helpful. Council, is there any other questions with regards to the particular notes that have been presented to us, or any other clarity at the moment? Seeing none. Okay. Was there anything? Is there anything else from your presentation here?
I believe I had to. I think I get all my point through.
Okay.
If you have any questions, if the councils had, when they go through the notes and they have enough time, they have any mark, they can put them to mark, and we will explain them as it's coming.
Okay. Thank you. So then the go forward from here would be that you'd be looking for the board of directors to approve the audited financial statements as presented. Is that correct? That would be the motion. I see some nodding from the talking heads. So, council, so there's two options I think that would be available to us. Given the timeline that's in front of us, there is a timeline that is in front of us of this needs to be done to be able to proceed with the audited financial statements that then we are getting on Tuesday at our April 28th council meeting. I'm seeing some nodding over from administration, so we have to do that in order to make that happen. So I would offer to council that I think we have two options that would be available to us right now. Option number one is that we make the motion now, test it, and see how that goes. Option number two is that we could essentially take a break if council wanted to have a half hour to sit and just have a read through, take a break for 15, 20 minutes, 30 minutes, take a break and have council have that opportunity to review. And then if there's any questions, then that could happen. So I guess I would just open up to council. It's not a formal debate. I guess this is a board meeting to open it up as to how you're feeling, if you're feeling comfortable and want to just proceed with the motion as it is right now, or would you like to have a moment to recess, kind of go away from everybody else, have a moment to flip through and read, and then come back with any questions that you have. So I open up that question for comment from council. Councillor Grant.
Thank you, Mayor Dean. Maybe I'll make a comment. None of my questions or concerns would relate to the annual operation of the utility.
Okay.
Some of the questions I have are still some of the larger lingering questions of, the large debt that the company holds, maybe the cash assets that are being held, and also the interplays with the utility and the municipality, and maybe what's best. What's a proper way to move forward here? So again, none of my questions are about the operational expenses. I think they're all, from what I've had a chance to look at, fine. But I do have questions about move forwards. This CUI thing is still kind of sticking in I would like to see some final resolution to our CUI quest of, is it going to stay? Are we going to move it out? All those things. So again, not related to operations, but more larger picture.
Yeah, and by operations, you mean not related to the audit at this time. That doesn't affect your choice. Yeah, so it doesn't affect your choice right now as to whether or not you want to take a break and read it more. It's more, your question to administration would be, what further opportunities you're going to have to ask those questions, because your feeling as a councillor right now is those questions are unrelated to the audit. So, to Mr. Edney, I believe I've articulated. Thank you. Mr. Edney.
Yeah, thank you, Mayor Dean. To Councillor Grant's question. So I know the intent of that discussion is to occur after we have these budget discussions. If you had a chance to review your presentation, we're not directly talking about the CUI budget, but as we get through the presentation and have the discussions, how the utility fits into the city is going to play an important role in the go forward plan. So I expect all of those discussions to happen shortly after, we kind of, once council starts to think about what does the go forward path look like. So we will have those fulsome conversations shortly.
Yeah, and not to bring out the former drama teacher in me of what's in a name, but CUI no longer exists. And so just as a cautionary tale in terms of just language that we're utilizing, I think that would be a good reminder of, let's not talk about a company that no longer exists. Lead services.
Through the chair, Councillor Warzanowski would like to speak.
Thank you, Councillor Warzanowski.
Yes, thank you. I'm glad that Councillor Grant brought up this commentary, because while this is a board meeting, I think we're free to ask any questions we want. But in the context of the audited financials, I'm happy to move past that discussion if we do move forward with accepting them. But to his point, I do have some questions that relate to the operational performance of the utility that we can discuss after the fact. But as far as audited financials, I'm content with what was presented. Thank you.
Thank you. Okay. So, unless anyone is opposed, it sounds like right now that we would proceed with the motion to accept the audited financial statements, unless somebody wants to take up the offer that I had presented as a second option. So I'll leave I'll leave that question open here for another few seconds. Councillor Sambo.
Thank you, Your Worship. I hate to be a stick in the mud, but I do not like being presented with financial information that I need to make a decision on with literally seconds notice. If someone comes to me and said, why did you vote in favor of that audit? I can't reasonably give them an answer right now. I would really appreciate even 10 minutes to look through the notes to make sure that I understand what's going on. Luckily, I do feel like I have enough of a financial background to skim this and understand what's going on, but we need more time. It's just unreasonable to expect us to make decisions on this with such little time.
Okay. So then with that, why don't we take a 25-minute recess and we'll reconvene at 10 o'clock and provide that opportunity. And then to Ledge Services, if you could just help me out on this, because this is the first time I've ever faced this as a chair, so I would appreciate your insights. If we take 25 minutes and then council's like, I could use another 5, we can just extend and keep going because it's calling for a break, so it's not a timestamp piece, correct? We could essentially, we're going to say 25 minutes, we're going to aim for, we'll aim for coming back. Let's take 30, we'll come back at 10 after 10, and we're going to aim for 10 after 10 coming back. But if that gets extended, that gets extended, but we'll aim for coming back at 10 after 10. We would not be offside if we come back at 10:15 is my question. Perfect. Great. Thank you. So I'm going to call for a recess and we'll come back at 10:10, providing council. Council, what I would suggest on this recess, though, is go away. So either go down to our office or go down to the Cove or something like that. And to administration, if we could just respect that space right now for council to be able to do that, I think that would be a good go forward. Let's not take this time to take the time to read it. Awesome. Let's call for a recess. Thank you. Good morning, everyone. Just coming back from our break here, giving council an opportunity to have a further review of the financial statements for the utility company. With that, I do believe that a couple of councillors do have a couple of questions to follow up related to this. So I will start with Councillor Schindler.
Hi. Thank you for your audit report. I did have a quick question about a line item that I could not, I think it was on page 9. Just let me open that up here. Or it was, nope, sorry, I think it was on page 23. 23. It is not on 23. It is on, sorry, it was on 21. The line item accrued liabilities. Could we have an explanation as to what accrued liabilities is?
It's a simple concept. For example, let's say for the month of December, the actual invoices will maybe arrive in end of January. So the administration will make an estimate. They know that this is coming. So they just put an accrual, which is an estimate for the expenses that we have to wait until maybe January to get them. Is that fair? Yeah.
Okay.
Does that answer your question?
Sort of.
Yeah, so because if we don't do that, the expenses will be lower. So we had to put that because we know it's coming. It's just a matter of timing. So we
Okay.
put that as a journal entry to make sure that it's comparative from last year to this year and make sure that it's closer to the reality than just waiting for missing that additional expenses that may be booked in the following year.
Okay.
Mr. Edney?
Yeah, thank you, Mayor Dean. Just to maybe simplify the answer to Councillor Schindler's question, what it means is in December, we went and did some work, or we got somebody to do work for us. We know we've incurred and we're going to have to pay for that, but they haven't sent the invoice in yet by December 31st. They're not going to send it in until January or maybe even February. But since we know we've made that expenditure, we need to accrue it to say that it's going to be paid even though we don't have the invoice in.
Okay.
And that's why it's generally a small number related to end of the year type things.
That makes a lot more sense. I just have one more question, or just one more comment. I think as we go forward with this utility, I want to see I want to see us make it or see some ideas or have some initiatives going forward to make this a more what am I trying to say here? The importance of having a utility in this community that is that makes us money, I think would be. I'm having trouble with this one. Actually, I'm going to stop and rethink that, and then I'm going to come back if that's okay.
Yeah,
I had a whole wording about 5 minutes ago, and now I've lost it. So give me a moment, please. Thanks.
Yeah, I think too, going back to right before we went on break with some of the comments Councillor Grant had as well. If it's philosophy, if it's direction, if it's things that we want to do in the future, if it's a change, if it's how we're doing things, I think all of those comments should be saved until our later conversation that we're having over the next couple of days. Any comments right now are specific to the audit. So your first question, absolutely specific to the audit. So I would just encourage us for the moment, again, anything philosophy, anything operational, anything like, hey, could we do this in the future? Let's pause on those comments and just keep our questions specific to the audited financial statements. Councillor Sambo.
Thank you, Your Worship. One question through you to Mr. Edney to pass on as he sees fit. I have no issues with the audit. I didn't see anything that I would raise any red flags. Thank you for your work, sir. But I think it's really important that whenever financial information is presented to council to the board of directors, that we take the opportunity to really understand it. So what I'm trying to assess is the financial position of the organization from this snapshot. And a big consideration is the offsite levies. So I find some of the notes confusing because it acts as though, or things are worded as though the offsite levies are directly contributed to the numbered company, and I find that hard to parse. But I understand that it goes to the city and then to the numbered company. But what I'm really trying to assess is is what's on paper here representative of all the offsite levy that will be going into the utility? Or is some of that still just existing in the offsite levy bylaw and is not included in this? Let me just reword that slightly. So what I mean is, does this show a snapshot of what cash is expected to come into the utility for infrastructure from offsite levy?
Who's taking that? Mr. Okay.
Yes, Mr. Chair. On Councillor Sambo's question, there is the offsite levies, as I showed Council yesterday on the financial statements. Remember when I said, the deferred revenue component, when I showed you how we rework the numbers, if we write it, check for $25 million and give it to the utility company, then the offsite levies would disappear for the utility company, would disappear off the city's books, and we're sitting then in cash utilities, deferred revenues in the utility company. So that is basically what it is, if it makes sense.
Mr. Edney?
Thank you, Mayor Dean. But that transaction isn't recorded on these financial statements yet.
Mr. Skonkin?
So there are monies due to the utility for the storm, sanitary, and water offsite levies that are held by the city, but not on the utilities books yet.
Mr. Skonkin?
Yes, 100% correct. The obligation in terms of the utility company only arises when they receive the funds. So in other words, you won't see it in the utility company's books. It sits in the city's books, and the moment the obligation arises in the utility company books is when the city either transfers the assets over to them or we transfer the cash over to them. Because the obligations in terms of the offsite levies, all of it still sits with the city.
Councillor Sambo?
Thank you, Your Worship. A follow-up to that. I'm curious why that's not marked as a receivable then, because the city has a contractual obligation to receive that and a contractual obligation to distribute it to the utility.
Mr. Skonkin?
You can probably set it up as a receivable because there's an agreement that you have in place. Where the city started to deviate from the practices and the agreements between the utility company and the city was essentially when council in the past indicated that they want to dissolve the utility company, and then administration on their own initiative stopped treating these transactions as it was supposed to be between the utility company and the city. So that's why you have said, that's why we would be sitting still with cash for the utility company offsite levies in the city's books, because there was a time, stamp requirement that was needed historically. I think it was 60 days from you receiving the cash to be paid over to the utility company, but that practice hasn't been followed, so that's why it still sits as a liability in our books.
Mr. Edney?
Yeah, thank you, Mayor Dean. Just to add on to Mark's comments there a little bit too, when he talks about administration just doing something, council made a motion to dissolve the utility company, but the utility company never got dissolved. So to Mark's points, we should have along the way been doing the accounting the same way in the same manner. But at the time, under the direction of that council and the administration, they started doing the accounting this way instead. So this will be part of our discussion again when we talk about what the future of the utility company looks like. So,
Okay. Councillor Rondawa?
Thank you, Your Worship. Through you to administration or whoever like to. So on page 17, as I just for the restricted cash, it stays as the same, it never is a change, and the account receivable and due from the related party, those items, line items. So why that restricted cash stays as the same and never change in number, and what exactly we are doing with that restricted cash?
So I can answer the first question. The restricted cash, because there was no contribution more from last year to this year, that's why there's no difference. I think in why it serves, I think the administration can maybe answer that.
The small increase is strictly coming from the interest income. That's it.
Okay.
But there is no additional funds being put
There's
in
no change at all. That's why this
no
line
change at
went-
all. Only small increase is a result of interest income.
Okay, and I just need another clarification on page number 19. The line item is other receivables. So those numbers, what is other receivable is?
Mr.
Other receivables can be, Councillor, it can be basically any other smaller amounts that either the city or the utility company is owed to, and it can and the spectrum on it is quite broad. And why it's not part of your accounts receivable, because your accounts receivable are typically your trade receivables. So this would be either maybe something that was paid in advance, where we have to get the money back, or some smaller non-standard receivable numbers that's coming through that we have to deal with.
Okay, thank you.
Okay. Councillor Grant.
Thank you, Mayor Dean. Through the chair to administration, I'm looking at page 23 of the financial statements, and I'm looking at the TD Bank loans. And my question would be, what do these loans relate to as far as the debenture that was taken out?
Mr. Skonkin?
Thank you, Mr. Chair. Yes, this relates to utility infrastructure that was constructed. On that, those loans is actually where the city front-ended some development in terms of the part of the development agreements, and it counts as a credit for the city for the development contracts and the way that we manages that. So it relates to those assets itself.
Okay, it was a front-end infrastructure cost.
I'd like to add a little more to this. Is strictly the Lift Station 13 project and Rainbow Road sanitary trunk build up. That's why the loans or TD loans were drawn up to do those projects.
Mr. Edney?
Yeah, thank you, Mayor Dean. Just to add some color to this is a similar type of project as what we're going to talk about later related to the city around. These are offsite levy funded projects, but we didn't have the money in the offsite levy to do the project at the time. So the utility company took out a loan to do that, and then it becomes payable as that money comes back in and is transferred from the city to pay it off. So it's a similar type of scenario that we'll talk about later when it comes to like the rec center and the fire hall and those kind of things.
Okay, thank you. Follow-up, Mayor?
Absolutely, yep.
My follow-up would be the shareholder equity. So I would assume that the shareholder is the residents of the city or the city in itself. So I'm just wondering, what causes that financial transaction where we're continually making investments and getting equity within the business?
Mr. Skonkin?
Thank you, Mr. Chair. Yes, to answer that question is that when the utility company was initially set up, when the assets or let's say all the utility assets that was in the city's books were transferred over to the utility company, the way that that transaction was done was the city would have received then equity shares in the utility company. And the utility company would have received all these assets that moved over to that. Okay. How it worked subsequent to that point was that all the assets or funds or anything that was transferred or given, let's put it that way, over to the utility company, that moved over through the due from account. So it didn't go how it was done initially when it was set up with the shares that was exchanged to it. And then the growth that you'll see in terms of how the investment basically grow, that will be then the net profits from 1 year to the next year that just makes that investment then grow a little bit each year with those numbers itself.
Okay, thank you.
Mr. Edney?
Yeah, thank you, Mayor Dean. And kind of just add again some more color in the background for it too. While there's the shareholders' equity and the city owns that, that's what we talked about yesterday of it being a non-financial asset. It's not like we can go out and sell our shares for $64 million or whatever the number is, because it's related to assets that are underground that only serve one specific purpose. So it's why we don't treat it in the city as an actual financial investment. Even though there was an investment, it's not an investment we can realize practically for those values, if that makes sense.
Councillor Grant?
Thank you. Yes, it does. And then would I think I could probably stop there and we'll have this discussion later.
Okay.
Thank you for that answer.
Councillor Grant. Okay. So thank you, everybody. I think that was time well spent by taking that break and giving council that opportunity to go away, come back with some very specific questions. I do believe that we're going to have, that there's going to be some more of that philosophical operational, as there often and always is. So I believe that those are coming. I just want to give one final opportunity, council. Do you have any questions specifically related to the audited financial statements? Seeing none, I do believe then that Ledge Services, we can move forward with the motion to accept the audited financial statements as presented. Can I have a councillor make the following motion, please? Councillor Sample.
Certainly, Your Worship. I move that the Board of Directors approve the 1538974 Alberta Limited audited financial statements as presented.
Comments, questions? Call for the vote. Councillor Worzanowski, do you vote in favor?
Yes, I vote in favor. Thank you.
Thank you. That is carried unanimously. Thank you. Thank you. Appreciate it. Thank you. Okay, so with that then, we're going to move to item 4.1.1, which is the 2026 final operating and capital budget, presented by Mr. Mark Skonkin, Senior Manager of Finance. Good morning.
Morning, Mr. Chair. Before we move over to that section, what I would like to do is, obviously, we want to thank the auditors, for their work on this, but especially I want to thank Mo Sadiki that's sitting here next to me. He basically, man alone, did the year-end work for the utility company, and with very little input from my side and oversight. So, a job really well done in terms of doing that man alone almost. So I just want to thank him as well and give recognition to him with council.
No, and I just want to say thank you for doing that. I think that as many opportunities that we have here from a public platform at our council meeting to thank staff, whether it's our directors or managers or other staff, I respect and appreciate you taking that opportunity to thank the work that was done. So thank you. For that work, it is appreciated, and thank you for highlighting that. That is appreciated, Mr. Edney. No, you turned your mic off. What, Mr. Edney?
No, you don't need me.
Oh, but then don't press buttons. Yes, and Mr. Edney, I will correct you on one thing. We do need you. Don't say we don't need you. We need you. Okay. So for this presentation. I believe now I'm going to Mr. Skonkin, who's coming to the podium, just thanking our auditor. Thank you so much. Mr. Edney.
Okay, thank you, Mayor Dean. Yeah, I just want to echo Mark's comments and thank Mo. What Mark was eloquently saying is Mo did this entire thing by himself, and normally if this was a separate company, he'd have a team behind him helping do this. So thank you for all your efforts and really appreciated. And we'll work next year to give you a little more support through this process. So thank you, Mo. Yes, you can go. You can go. So now back to the topic here. Yeah, there's
He's
work
probably
to
got
do.
another project to go work on now.
He's got a lot of projects to work on. So just kind of going to take a couple moments to introduce, I guess, what our plan here for this morning is, and how I'm hoping we can work through this budget process together here this morning. So yesterday we spent some time, Mr. Shonkin walked you through a preview of next week's financial statements from the city's perspective, again, to give council some understanding and the public as well of what our financial position looks like. The presentation today really covers sort of two two different but related aspects. One is we need to approve the final budget, operating budget specifically, so that we can set tax rates, so you can pass a tax bylaw, so we can send out tax notices, so on and so forth. The second part of the presentation is really to prepare council for how do we address some of the things we talked about yesterday, and where does the city sit in relation to these things, and how did we get into the position that we are now? What happened over the last 5 years? Where did things deviate? Where did things change? So my thought process, if it's okay with council, is we have a presentation here. Typically, I know we do questions along the way, but I think the way we've structured the presentation is to hopefully help answer a lot of those questions. So what I'd like to do, but I'm open to councils, is let Mark, and then I'll take over part of the presentation as well. We'll walk through the presentation. When we get to the end, either questions, or first, I think I would like us to focus on the 2026 budget. What do we like that's in there? What do we like that's out there? What do we want to make motions? And then have that philosophical conversation around how do we address the next 3, 5, 10 years in the community. So if that sounds good to council, that's the process I'm recommending we take today and then into tomorrow.
Well, it's a good thing I have control of everybody's mic, because then I just don't have to turn somebody on, basically, is what we're saying. Okay, absolutely. No, that works. So, council, as it's coming through, if you have any questions, please just make note of those questions, write them down, have them ready to go, and then we can bring those questions forward. Also, within our agenda package, then there's three parts to our agenda package, if you will. The part that we're going to be going over is just going to be the first part. Is that correct? Everything else is kind of the background information of how we got here. Is that correct, Mr. Edney?
Yeah, that's correct. So you have a presentation that is up on the screen right now. That's what the focus of our discussion is going to be. Right behind that, you have a list of all of our capital projects that you've already approved with the funding sources. I know that came up as a question yesterday. Again, it's for public consumption in your agenda package. And then behind that, for reference, if we need to, is the entire presentation that was walked through and worked through back in December for the interim budget. So our focus will be on the first presentation, but we have all that other information to refer to if we need to.
Fantastic. Thank you so much. Okay. Mr. Shonkin, looks like you're up uninterrupted.
Well, Mr. Chair, if I can maybe just make a mention there, I do not mind, and I actually prefer, as I do presentation on the specific slide, if there's a question, if council can ask me a question on that, because it's I know how it is. My mind is going to be in it, and so ask on the slide itself. Don't run forward or backwards. Just here, and then it makes sense. And if you're not, make the notes as Mr. Edney has said, and ask your questions then at the end, because I think it will sometimes also give me a time to catch a breather and gather my thoughts as councils would ask questions. So it's sorry, Mr. Edney, but whichever way. But I'm okay with whichever way our wise leader will instruct me to do.
So,
Mr.
thank you, Mayor Dean. So if Mark would prefer you ask, we can do that too. I think my intent was probably most of the questions you're going to ask right up front are going to be answered in subsequent slides. So feel free to do however works for you. This is your budget and your time. So if you have a pressing question about something on a slide, jump in. If it's more a philosophical type thing, that'll probably be answered somewhere down the road. So.
That's right. And if council will be okay, for me to say when you ask a question, not now, later, and so on. If you don't mind, I will do it. But like I say, anything that's in front of you on the screen, ask the questions, and then I'll be able to answer those questions to the best of my understanding.
Process clear as mud. I love it. Good.
Okay.
We all know exactly what we're doing. Good.
So the introduction, Mr. Edney already did the introduction there for us. So the high-level overview is, like I mentioned yesterday to council, the whole purpose of me presenting the financial statements to you for the 2025 and the way that I've restructured it is to lay the ground, the foundation for us as we start these discussions today. My goal is to give council as much insight as I've been able to gather over the past few months, see what makes sense to me and what doesn't. One of the things, for me, stepping into this organization, knowing about the enormous growth that has occurred, in terms of assessment, property values, inflations, and so on, and looking at our budget that we had at the end of 2025 when we approved the interim budget, some things didn't make sense to me, because theoretically speaking, when you have a municipality that grows this fast, assessments are growing fantastically, you have growth in property values, we should not be needing to go into reserves to balance our budget, for a year. We would be transferring funds, to reserves when you have such good years, and that hasn't occurred. So that forced me to go into the detail and making sure that I understand the histories, of the organisation as much as I can, so I can be in front of council and give you some insights that I thought might be valuable to you when you make these tough decisions. So the first item that we're going to be starting off is the operating budget. So the operating budget itself wouldn't have changed significantly from what you saw at the interim budget and now. The only changes that we've had is items that have come to our attention from December to now. Some of that council made motions. One item was an operating project item that didn't get spent in 2025, so we do it in 2026, and I'll show the motion when it was brought in. Council can see on the 2026 numbers the for the interim budget there, and then the adjustments that we have, to the updated numbers for 2026. Starting off with the property taxes there, when we did the interim budget, we did a estimate in terms of how much money we would be receiving from our property taxes. When our final assessment numbers came in, it was about $678,000 more than what we initially anticipated at the interim budget. And as you can remember, at that point, Mr. Edney did point out to you that we do anticipate that there would be sufficient funds to carry, that shortfall that we had there. However, as time has gone through, everyone, all staff had more time to go through the budget, and we would see certain things and additional information come forward. There were quite a few additional adjustments that we made in terms of the expense side. I'm just running through those. The biggest adjustment on the personnel costs, you'll see it's $1.1 million. That is a significant number, and it is not additional staff that the organisation that we've added in there. After the interim budget, we got our new information for the WCB fees, and our premium increase from prior years to now for our organisation is almost $500,000. So we've been penalised substantially, for some things that has happened in the past. And from what I can understand, there were some injuries, as well as staff that went off, let's say, on disability because of maybe the working environment in the organisation maybe has been not so conducive to staff welfare, if I can be as blunt as that, in terms of that. Then the other item that is in terms of the personnel expenses, when we compiled the budget for the firefighters, one thing that we noticed was that the way that our accounting system or our payroll system works is the overtime for the firefighters, when they work on stat days was put into gets coded into overtime, and when they did the assessments in terms of what's the payroll budget for it, that component was missed, and so therefore we have to put it now in there as well. And I think that number is roughly about $450,000 or something like that. And then only one staff addition was brought into this budget, and that is related to Planet 2 that Mr. Chandiak brought to our attention in the last couple of months to say that, it is just truly something that they need, for their side of the operations. And that is then the only other item in there. So therefore, you'll see that the 1.1 million now is accounted for. Smaller adjustments in terms of, there's a $5,000, Mr. Chair.
Councillor Sambo.
Thank you, Your Worship. A question through you. I think in previous presentations in previous years, we've asked the question of how the utility pays for the staff labor at the city that works for the utility. Could you remind us of that?
Sure. That is being done through the, I'll tell you now exactly on which line it's going to be in. It will be on the user fees and charges. So in the on the administrative side, we will see that the admin side has a revenue line coming in, and that revenue line is to counter the employee costs and and administrative costs that we as the organisation have that is being run through the for the utility company, and that's then where it's been accounted for through the due from account. But basically, that's where it's taken out is on that line there. Okay. So the $5,000 number that you have there is that is a request from council that came in, where council requested that they would like to have a police clearances for individuals that's going to be working with the community groups and so on, which is very standard, as you would think. Like even schools. If I want to go and volunteer for a school, I have to get a police clearance to be to be involved in that function. So that is why that number was brought in a little bit late, but I mean, for the final budget. There's a $26,000 adjustment in terms of the rental and leases. That's an adjustment number that came through from from the community group. Updated numbers there. Then on the contracted and general services, there's quite substantial numbers in there. As council remember, we had the View Handibus did a presentation to council where they indicated that the cost for the View Handibus anticipated for this year is going to be about $400,000. And the way that they do that, they've got a per individual calculation, and then they apply that to our per capita numbers. As it was mentioned before, it is we work on the numbers that they give us from our assessment or our census numbers. Also included in there is the Max Purple bus of $200,000. At the interim audit.
Sorry, on the View Handibus then.
Yes.
Can you say that? I just want to make sure I heard that right. Can you say that again? They base it on what? Can you say that again?
Sure. The unit or the cost that they calculate.
Yeah.
How they invoice the city for, is they will have a cost per person.
Yeah.
Or cost per capita, and then they multiply that number to the amount of residents that we have in the community, and that is how they get to their number. And they use that same number as a method of allocating the cost within the whole group that forms part of the View Handibus organization, that's being serviced by them.
So what if the service level doesn't change? What I mean by service level is, what if the same number of humans are using it as used it before? So we're facing exceptional growth, right? Like we're between 9 and 14% year over year for the last X number of years, right? I mean, we don't know the full number yet, but we're anticipating same range again, 9 to 14% growth. So if I'm hearing you correctly, part of what they base it on is your total population, regardless if more humans are using their service.
That is correct, yes.
Okay. Mr. Edney.
Yeah, thank you, Mayor Dean. Mark, do you want to skip ahead a couple slides just in your presentation here? Just because we've got this laid out item by item that we're going through here.
We can. I can wait.
No. One of the comments I just want to make related to Rocky View Handibus, so that we're clear, is we've always paid them somewhere in the neighborhood of 400,000. When our team reached out to them and said, "What do you need for 2026?" they replied back and said about $150,000 for 2026. We sent another email and clarified, "Are you correct that this is the number you need?" Yes, that was put into interim budget. Subsequently, they came back and said, "No, we were wrong. That was what we needed for the fourth quarter of 2025. Our 2026 number is actually the 400 and some thousand." So we probably should have done a better job of pushing back on them. But this isn't a change in their funding. It was a missed number at interim budget. The interim budget should have had the $400,000 number in there and didn't. Max Purple was an oversight of, again, if you remember everything that happened in October, November last year. Normally that was entered by finance. Finance at the time assumed planning was entering that, and nobody ever actually entered the cost for the Max Purple. So again, another administrative oversight on a cost we incurred last year that wasn't put into the budget for the interim process.
When we get to future slides or future conversations here in a moment, or later today or tomorrow, what is the opportunity council is going to have a discussion with regards to Rocky View Bus? Because this is a clarity that I didn't have an understanding of before, because I'm just wondering, is there going to be opportunity for us to have a conversation about ridership usage, understanding that, and whether that gets maintained or not within our budget cycle, knowing some of the other things that we're looking at when it comes to transit? Is there going to be opportunity for a philosophical conversation when it comes to, I guess, in some ways, both of these items? I do think, though, that Max Purple and Rocky View Handibus are materially different in terms of scope, usage, purpose, all of those things. So, because, again, philosophically, is there an opportunity to look at, if we wanted to look at a different option, can we have some of those conversations, and what's the opportunity council is going to have that given this new information now, Mr. Edney?
Yeah, thank you, Merdine. I think that was the intent of, after we get through this, to then talk about all the things in the operating budget philosophically. If you remember, Rocky View Handibus came here and you had a bit of a discussion around them of how it works and that kind of thing. An interesting tidbit, we don't even have a signed contract with Rocky View Handibus. So in the past, we've been sending money to them without any kind of formal contract in place. That's something we're working on, pending the outcome of the budget discussions. Their model is their model. So my understanding is either you participate or you don't. So it's not a pay half, it's a pay the fee or don't pay the fee and don't provide the service, is my understanding. But we can get some clarity on that as well if that's a path you'd like to go down with Rocky View Handibus.
Mr. Shonkin.
Mr. Chair, maybe just a side note on the Rocky View Handibus Society. The one thing that I can say is they do produce audited financial statements. So in other words, what we often find with these not-for-profits or some societies is that the bookkeeping and the financial statements are not always audited. So the level of assurance that we can have, at least on the financial statements, on the accuracy of the numbers, is fairly good with Rocky View, because they get a proper audit that's being done each year on those numbers. So, like I said, just a side note, but something to keep in mind.
Yeah, thank you. Just before going to Councillor Sambo here, just to be clear, because just knowing how the world works in my world, I want to be clear that I am in no way questioning the ethics numbers, what comes back from Rocky View Handibus, anything like that. So for me, it's not about the organization. For me, it is about when we're looking at a budget and knowing some of the things that are going to be coming up and some of the things that we are suggesting. And I know that I can already hear a little bit of commentary of like, well, yeah, but if you look at it percentage wise of what is our budget, what does it matter? Okay, I'm there. However, is there opportunity to look at, and how do we look at, if a service, if we were able to deliver the same service to those clients in a different way, for example, through if we had a stream within our gifts of kindness where we were able to provide some sort of ride share service and we were able to budget an allocated amount and figure that out, and then that's going to be at a different price point than what we're doing at Rocky View Bus. How does that look? So this is not about the organization. This is about, I think that the job on this side of the desk and on your side of the desk, the job of this organization is to look at how every dollar is spent in this place. And I understand that sometimes we look at things as a matter of percentage, right? So we go, well, we're a $60 million budget, so percentage in a $60 million budget of a $100,000 item. Well, and I'm not about that. I'm because I come from the not-for-profit world. And so because of that, that often frames that. But I also think in the for-profit world, I know my colleagues that sit up here that run their own businesses, they don't look at something as a throwaway expense because it's a smaller percentage of what they do. They're like, I'm spending this because. And so I think it's incumbent upon us to do it. So I just wanted to provide some commentary on that. This is not about me questioning anything about that organization. It is questioning about the service that we provide to our residents, and are we providing it in the most efficient way possible. Councillor Sembo.
Thank you, Your Worship. Through you to Mr. Edney. Mr. Edney, could you flag later on in the presentation today when is an appropriate time to ask some questions about financial controls and contracts or the lack thereof?
Mr. Edney.
You can ask that right now if you'd like to. If it's okay, I wouldn't mind just making one quick comment to Mayor Dean's comments there of 100% agree with you. This is entirely that forum. We should be, every $41 we spend, we should be justifying where it is. With both of these transit services, I think we're encompassing those with our transit feasibility study, and I know we've talked about these being part of. If that's a particular item we want to talk about, we won't be able to solve that in this short 2, 3, 4 day discussion we may end up having. But that could be a motion that comes out of council for us to go investigate other options regarding the Handibus. When you want to talk about financial controls, right now is going to be as good a time as any time.
No, but I think what Councillor Sambo is getting at is there was a murkiness, if you will. Originally, it was don't ask anything until the presentation's over. Mr. Shonkin said, no, ask if it's related to the slide. And then I think the agreed upon solution was if it's bigger philosophy, we're going to flag that and bring it back. So I believe that Councillor Sambo's question, absolutely valid, and my goodness, I want to get into that conversation. I don't think is related to this particular slide. So I think, to be fair to I think we had an agreed upon process. I think we should flag that, bring that back, or are we changing the process again? Mr. Edney.
Yeah, thank you, Mayor Dean. So this isn't a question that's going to be addressed anywhere in the slides. So
right. So it should wait.
If we want to wait till the end, we can put it in.
Yes, that's what I think we should do. Okay. I think that was agreed upon process. If it's not directly related to that slide, we're going to flag it. I've written it down as well, Councillor Sambo, to make sure that we don't miss it. And then we bring that up. Okay. We're going back to you.
Thank you. Mr. Chair, then now the another item that we didn't put in include at the interim was the assessor fees. So the assessor fees, where we have external assessors, they do the assessments on the properties, and that's what we use as the basis of for our taxation. It is egg in the face on the finance side because we couldn't believe that we've missed our most important thing, our biggest contractor that we have, to have it in the budget. So that one I have to take on myself. Now, I think it's important for me at this point to talk about the educational tax itself, because as council can see, comparing 2025 to 2026, the educational tax that we collect on behalf of the province and pay it, they take it out of our bank accounts, went up 30% from 1 year to the next. The number that we had at interim budget, you can see we had from 17 million to 19 million. However, when the true numbers came in, that number jumped up to $22.7 million, that the educational taxes has gone up substantially. We have zero control over that number. It is a number that the province gives us. They work that number on the equalised assessment numbers, and that's their way of trying to spread the load evenly throughout the province. And yes, as we can know, teacher strikes, or that was the schools that was near. So to some extent, one can say maybe it makes sense. But anyway, I'll leave it for there.
Councillor Sambo?
Thank you, Your Worship. A question about the education taxes and how it's collected by the City of Chestermere. From my understanding, we're collecting that often monthly, right? A lot of people are on the monthly payment program. So we collect that monthly, and then the province asks us to remit that quarterly, I assume. So I'm curious about, on the revenue side, if the education tax has been adjusted by 3.5, is our investment revenue going to go up for a bit for that period of time that we're holding on to the funds before we send it to the province?
Yes. Well, it's because we get our taxes at mostly at July. That's where the biggest number comes in. The the benefit that we have in terms of interest gains on the educational tax is it cancels out, because now you get it, and now you can earn interest on it, and the second half they take it and you haven't received the money in, so it basically cancels out. So maybe a little bit if there's an interest rate variances between months to months, but overall through the year it should balance out more or less.
But would there be a way to have that be more beneficial in terms of, this is a big topic that AB Communities is working on, MCMC is working on, or name the organization, we're all talking to the province about it. If there was a different structure in how the province, in terms of when they collected the education tax, could there be more of a benefit created for municipalities with regards to being able to collect interest on that investment? We got to pay it anyway. But if there was a set time that it was coming in, would then it not, because what I'm hearing is that it equals itself out, so we don't really benefit from that interest gain. Is that correct?
That's right, yes.
Okay, but what if there was a set time that it was all collected at once? And if that set time was different from the bigger time when we have that investment, could there be a benefit to municipalities?
Possibly, but I mean that has to be calculations. But the only way that it can be a benefit to the to municipalities, it means it would be a negative to the province. So in other words, who's gonna do the? I mean, as I explained to council yesterday, the province when they give us grant money, and we don't spend it, they regard that interest accruing on that grant money as additional grants that the city receives. If they hold those grant monies back, we don't get more that interest on that grant monies that's sitting in their bank accounts. So if I have to make a reasonable guess, I would say the province would be fairly vigilant in terms of to make sure that they don't lose the interest component on on these funds, and making sure that it's fair and evenly balanced between them and the municipalities as much as I can. But I can't speak for the province.
Councillor Sambo.
Thank you, Your Worship. Additional comments through you. I don't want to spend too much time on this because I think it's really not, in the end, it's not going to make that much of a difference. But there's a piece here that I think is missing, because some municipalities are currently arguing that the reason why it's good for municipalities to collect the education tax rather than asking the province to collect the education tax is because it creates an investment revenue for the municipality. So there's some municipalities who believe that that is a significant enough revenue stream for them that they would not want the province to take over that task. So I guess I just want to throw that information out there as an FYI, because I'm not sure we need to talk about it extensively, but as maybe something to look into to see whether we're taking full advantage of what we could be with that money that we're collecting.
The only real way that we would make money off it is if all the educational taxes are collected at the beginning of the year. Now we sit with, let's say, the $1 million, and now we start earning interest on this money, and we only have to pay $250,000, for the remainder. Yes, and that situation, yes, you can say that municipalities can make now return on investments based on this timing difference, but because now it's half, it like I say, there might be some gains, but I don't see it being that significant, because beginning of the year, first quarter, the province takes a quarter of the educational taxes out, so it's gone, and we haven't received really the funds to come in for it. The second quarter, same thing. They take the money, and we haven't received the educational tax, excluding, of course, the tips money, but that is small. And then on the second part of it, now we receive the full amount from the educational tax, and now they're taking, the small, the third quarter and fourth quarter, and now we earn interest basically then on the remainder of the educational tax, where we lost the interest on the beginning side. Now we catch it up at the inside, and therefore I say, theoretically speaking, it should balance itself out.
Mr. Edney?
Yeah, thank you, Mayor Dean. I think, to Councillor Sandbo's point, we probably don't want to spend a lot of time talking about education tax as part of this, but what I'm hearing is an opportunity, maybe Mark and I will take this away, of could there be a scenario or a process where we could benefit from it while still collecting the same amount of education tax from our residents on the province's behalf. So while the system right now, the way it's set up in the city of Chestermere, may not necessarily provide us much benefit, perhaps there's a way we could look at doing it that would provide us some benefit. And maybe we can look at that, and if there's anything that makes sense, we can bring that back to you, kind of from a lobbying perspective.
Thank you, Councillor Grant.
Thank you, Mayor Dean, and I completely agree with Mr. Skronkin. That yes, when we're collecting those education taxes, we're sending it even before we're receiving a large amount of that money. So as such, we're incurring that expense, and maybe possibly incurring interest on borrowed money that we'd have to service that amount. My second point to the whole conversation is that if we are keeping the money and we are investing it, that it has to go into a principal protected investment, which has really low margins of return. And as such, limits our ability to actually see much financial gain from collecting and holding the education taxes.
Okay. Thank you. Yeah, we're good.
Good. And then maybe just the last number there, when council looks at the debt repayment, you'll see that our debt repayment from what we budgeted to what we have now for the updated number has gone down. It's not that our debt has gone down. It is just when we did the interim budget, it was done on the assumption that we would have received the the $5 million that we borrowed to purchase the golf course. The application is in, and they take the money twice a year, so that's why that number is shown like that. So.
Councillor Rondeau.
Thank you, Your Worship. Through you to Mr. Edney, to the presenter. So from the slide, yeah, that's the one. So our revenue is 18%, and our expenditure is 23%. Seems like our expense is growing faster than we are generating the revenue. There is any clarification on that?
Sure, yes. And that is basically, as we've mentioned, is that the growth of the organization, the revenue coming in wasn't matching the growth of the organization in terms of expenses. So that is why we're sitting now with this year. As council can see on the bottom line there where it says net, it means that and just to make this budget balance, we have to take basically $1.7 million of the little reserves that we have to make sure that we balance. So yes, it is true. We need to either stop inflation, or we to do something how we can do, how we can deal with these challenges that we have.
Councilor Randall, I don't think I've ever seen Mr. Edney so happy on a question before. So, Mr. Edney.
Thank you, Mayor Dean. I think we have in the neighborhood of 27 slides coming up that are going to address that problem and how we got here.
Mr. Shunkin.
Well, Councillor Randhawa, thank you very much for laying the groundwork for what's to come. Thank you. So this next slide is it's just for formalities and just to show council that we do present, as we present, to council, we do present a balanced budget. It might not be pretty, like I say, we're going to be taking about $1.7 million from the reserves that we have just to balance the budget, and this is how we show how the numbers balance. I do want to say something. The way that the way that is presented here is a bit confusing. I'll make sure that the pluses and minuses make a little bit more sense, so that when you add them all up, you'll get to the zero numbers at the bottom. Yes. So I'll take that on me and make sure that it will make more sense going forward. Okay. So this next slide is just the brief description or the little bit more detail in terms of all the adjustments that we've had. But the one item that I did miss, let's say two items, is on the overtime for the CPOs. We only, at the interim budget, we only had $30,000 in there for that. So this is additional $40,000 to bring the total CPO overtime budget to $70,000. The other item there is you'll see that our fuel cost number has increased, and that is due to the changes in the world that has occurred, and also the increase in the oil prices and so on, and then that's being reflected here. Mr. Fluke is fairly confident with this adjustment that we should be okay with the information that we have now in terms of our fuel and energy costs until the end of the year. But looking at the news and the forecast, things might be quite significantly different by the end of the year. So the next portion is going to be the capital budget. Here on this side, I just want to point out to council the additions that we have. Council will note that there's on the fire lockbox system, we have $21,000 in there. That was already previously brought to council, and the motion that relates to that is in there. And the second item is on the golf course improvements, the $200,000. I'll explain why this number all of a sudden appears now and wasn't brought to council at the interim budget. It is the way that the golf course operates their business. A lot of the assets that they have is leased assets. So in their mind, they see it as basically almost like a rental expense. Accounting terms and the way that we work as an organization is no, as soon as you have a lease agreement, it becomes a financial transaction, and that asset, when you're going to be using it for the majority of its life, you account for it as an asset in your books and you raise the full liability. And that is the reason why this all of a sudden jumps up, because we have to do it differently if it was just a normal rental that the golf course would have had. So this is purely from an accounting point of view and from a legislative point of view that we follow the right rules.
Mr. Edney?
Yeah, thank you, Mayor Dean. I have two comments just before we go too far. Just to add on to the comments around the golf course, that's included in the golf course operating budget to be paying that back to us. So as Mr. Shunkin mentioned, now that the city owns it, we just have to do that a different way. One thing I had promised Mr. Fluker, and I apologize, he had a family emergency come up this morning. He's going to be gone for a couple days here. One of the things that we've identified in the operating budget that we'd like to add in as well is $20,000 for parks seasonal staff. It's to execute on some of the unstructured rec stuff that we're working on, specifically the mobile playground, the mobile skate park. It's just to bring, we don't have staff to manage that stuff. So his request was, could we have a slight adjustment to the budget to bring on a couple more people to deal with those particular items as we deploy them this summer. So apologize to Mark, it didn't get in there, but I thought we're in the middle of it. Maybe we can add that onto our slide and have a conversation about it as something to add to this budget as well. So that'd be $20,000 for park seasonal staff. Yeah, so that.
Sorry, Mr. Edney.
That would have been on the previous slide in the operations.
Sorry, the question was asked and no one has no idea what you're
Oh,
talking
yeah,
about right now.
sorry.
Sorry. So, Councillor Schindler?
And so you're talking the 20,000 for parks. Is that an operations expense rather than, because now we're on capital, so.
Yes, correct. I wanted to catch us before we got too far down capital. That would be an operations expense.
Thank you.
Okay, so if we move further now, I'm going to, just for completeness purposes, what we have to bring in is we have to bring in the incomplete projects for 2025 now, and that's the carry forward project capital that council sees is the $23.5 million. Council has already approved those funds in the past. We just make sure that it's being brought in forward and we continue there. Also, I have to show the $5 million of the loan, otherwise we won't balance in terms of the numbers. To show council that that's the $5 million that's going to come in that relates to capital. And then I've made an adjustment there of $851,000. That is just to make our amortization number charge so that we're going to have through the year as close as accurate as possible from the information that we have now to make sure that we can match that cost there. And then at the bottom there, you'll see that's where this is where we balance the budget. We use the 21.5 million, 21,500 from the restricted reserve, and then the unrestricted surplus we use $1.3 million. Gives us a total of 1,359. This is just a variance from the interim to the final. So remember, at the interim you had 300,000. So the total now is about close to 1.7 million. So now we come to the, to how do we fund for all our capital? And our organisation makes extensive use of our offsite levies. Our LGFF and CCBF, those are relative small grants that we received on an annual basis. And just to put it into perspective for council here, so that you can see what I was trying to explain to you yesterday, is on the LGFF, we are planning, carry forward plus current year to be spending in 2026, $13 million from LGFF. We only get 2.7 million per year. So work out for yourself how many years we are behind in terms of spent funds on that. And secondly, on the CCBF as well, we indicated $6 million, so that's going to be spent in 2026 plus the carry forward from the previous year. There's 2 years of CCBF funds that's being held back by the province where we haven't allocated projects yet associated with it. So in other words, that is, and that's where we're working to make sure that we're going to be identifying projects that's going to come up in 2027 and so on, that we can use up all those funds. And considering the plans that council has in terms of, let's say, the rec facility, roads, infrastructures, and those kind of things, I believe that we will be able to get all these funds absorbed, and we can work on a current basis as we move forward so that we don't have this fall behind and we lose basically 400 or what if between $400 and $500,000 just on interest benefit that we could have had as an organization. Like I say, what I mentioned to council before previously, if you don't understand the numbers, council will never know where we lose money, and that is the purpose that we come forward and we show you where it is and what we need to do to make sure that we don't lose those funds, because it's free money that is just lost now. Now, in terms of how we fund it, like I mentioned, the LGFF, CCBF, and then the offsite levies. Their council will note something, the front-ended portion there of 14 million, and that relates directly to the front-ended credits that I explained to you yesterday, where it's signed an agreement, and only when that asset is constructed, it then gets transferred over to our fixed assets, or if it was a utility-related asset, it gets transferred over to the utility company.
Mr. Edney?
Yeah, thank you, Mayor Dean. And so in this particular item, if you remember, this is the twinning of Chestermere Boulevard that's being completed by Anthem. So they're doing the work up front, they're paying for it up front, and then, as Mark said, when we get that asset transferred over to us is then when we recognize it on our financial statements.
Okay, and then basically the the bottom portion of that table is just to show how everything balances. This is where we're going to spend all our funds, and these are and this is how it balances. To carry forward projects, the new projects that came up as part of the interim budget, and then these adjustments as I just mentioned to council. What I do want to point out to council, nowhere in these numbers here can you see any funds coming from the city. Zero. For these capital projects that we have there, we have zero money that's coming from the city. So therefore, our operating budget, as it stands now, only covers operating expenditures, and our capital is 100% reliant on grants that we receive and offsite levies. That is a system that's going to implode. Within time, if it's going to be this year, next year, or 3 years down the line, anything is possible. But these are the dangers that we are facing now, is because we don't account for asset replacements and any of those things in terms of this budget, because offsite levies cannot be used for replacement of items. It's only for growth that's as a result of the growth of our organization. CCBF can only be used for new assets. So it also cannot be used to replenish assets. LGFF is the only one that we can really play around with, where we can use it for new or replacement of infrastructure. So keep that in mind as we move forward. And I just want council to start placing it in your minds as to, if this was your business, your organization, how would you have thought about these things? And I think it's important to understand and see what is going on.
Councillor Sambo?
Thank you, Your Worship, through you. Could you clarify what assets you're talking about specifically? Are you talking about mostly road infrastructure and the non-utility assets?
That's right. So when I talk here, I speak specifically to the city only. So most of the utility stuff that we have is accounted for separately, as because of the separate nature that we have between the two. Does that?
Mr. Edney?
Yeah, thank you, Mayor Dean. Just to add another comment into this too, yes. So when we're talking about everything here, and we're talking about future asset replacement, we're talking about bridges, roads, sidewalks, pathways, playground infrastructure, potentially if anything ever happened with the current rec center and we needed to do something there. So we're not counting for that. Not to cloud this conversation, because we'll have it at a separate conversation. The utility is facing the same challenge. We aren't collecting money for the future replacement and repair. We are only using offsite levies to build new stuff, and then we're accounting for minor operational repairs in the budget, but there's nothing in the utility budget that sets money aside specifically for future capital replacements.
Councillor Grant?
Thank you, Mayor Dean. I'm going to say the F word, franchise fee. Are you addressing that in the presentation, or, just because you're talking about funding sources and you haven't individually identified it yet as a revenue source? So is that further in the slide, or is that related to the utility budget?
We'll be able to talk about the franchise fees, and it is an important thing to talk about. We can bring it into the city's books. I didn't for this purpose. I didn't include it as an option, but it is most definitely an option that we have to explore. The reason why I probably could have done it, as an option here, but I feel that our biggest concern that we have at the now is related to non-franchise fees. If I can, it's a good point, because we have to use it and we have to bring it in. Lots of municipalities do it from all the utilities if they want, and it is something that we should at least explore and bring forward.
Mr. Edney?
Yeah, thank you, Mayor Dean. I think there's sort of two questions being answered there, to provide some context for Mark. So I think what Mark's referencing is most municipalities would be charging a franchise fee to the utility company, right? For the pipes and stuff that are in the ground. Now, we own the utility company, so we don't do that. I think what Councillor Grant is referencing was the discussion we had originally as a group of previously. We continuously brought money in from the restricted reserves, and there was a discussion around franchise fees being set aside for capital. The challenge we have right now is the franchise fees are still being used in the operating budget to fund operations. So that, again, to Mark's point, will be a conversation as we work through solutions. Again, if we pull that $2.4 million out of the operating budget and use the franchise fees to help fund future capital, we have to replace that $2.4 million in the operating budget. So we'll address that as we work through the day here on what the options look like.
Councillor Grant?
Dean,
Oh.
I'm good. I'm good.
Okay.
Thank you.
Just before we move to the next slide, I'm going to suggest we take a quick 5-minute break, and we'll come right back and then head into lunch after that.
Thank you.
Good morning, everyone. Just coming back from our break here, and we'll continue on with the presentation before we go into our lunch break around noon. And so I'm going to turn it back over to our Manager of Finance, Mr. Shonkin. Good morning again.
Thank you, Mr. Chair. Yes. So if we move over to just to recap here quickly, this is where I show you where we're going to be spending our, where we're going to get our funds from for the 2026 year, the grants, offsite levies, and so on, and the carry forwards of those capital projects. Now, when we go to the following slide, this is looking at our capital plan for the next 5 years. As we are required by the province to do a capital budget 5 years and operating for 3 years. So this is our capital plan in terms of where we're going to get the funds for it. So here council can see that in 2027 we have reserves that we say that we're going to be taking from the city. That's going to be $5.2 million, and the debenture that's going to be $24 million, and then the recreation offsite levies of $40 million. So that is basically for the rec centre was going to be, I think the estimations now at this point is about $65 million there, and that is how it's going to be funded. Fire on the offsite levy, that's for the new fire station. The numbers that we have now is about $11 million. And now and then so it follows for 2028, 29, and 2030. What I'm going to show council on the following slide, or maybe before we move over to that slide, is here just have a look at the LGFF, CCBF at the top there, and you can see, as I was mentioned to council, what the numbers per year is, and how much we basically then have let these funds accumulate, and we're going to start using it up very quickly now over the next 2 years. And like I mentioned, the purpose of this slide is so that we can see all the funds that we're going to be needing and how we say we're going to be funding these items over the next 5 years. When we go to the next slide, is where I do the calculations to actually see for these funds that we're going to be spending, where is it actually going to be coming from? Do we have enough funds in our unrestricted surplus? Do we have enough fund in our restricted reserves? What's the funds balances looking like in terms of our offsite levies funds or the deferred revenue that we have on the offsite levies? And this is now the flow of the cash flows as we have it. I'm not going to go into the detail of each of these individual amounts. The purpose of this is more to show council that I actually did balance all the numbers, all the money's coming in, going out. So it is proven. I've worked with Mark Rold in terms of all the offsite levies that we anticipate to come in for the different categories, rec, fire, library, and transportation, and so on. And that is then to make sure that we balance so that I don't miss the funds that's coming in. And as council can see, when we reach 2028, we basically depleted all funds available to the organisation that we can spend. You'll see that although it says 26 million there, when you look at the transportation component there, it has unrestricted, so it's got a restriction in the offsite levy on transportation. We cannot use those funds for anything else except transportation. So our funds, and also included in here is our debt capacity. So we start off with the $58 million that we say that we can borrow, and now I'm showing you how these funds are being used up. We are using up our borrowing capacity already in 2027. After that, no more real borrowing capacity, and then we will be at the max of the internal restricted amounts that council has said before. Now, what happens now is we start eating into the little reserves that we have at the top, and eat up all the offsite levies that we have projects for, and basically, if we do all these projects by the end of 2027, we as an organisation would be in severe dire financial challenges that we're going to have to face, and it's going to be tough to get out of.
I just have a quick question about the comment that's been made. It's made a couple of times. I'm just wondering if you could help clarify. So the comment that you've made, and I hope this doesn't come across as critical. This is simply asking. So the comment that you've made, and I don't like phrasing things like that because it sounds accusatory, so I'm not meaning to be accusatory at all. The comment that you've made a couple of times is what little reserves we have. So the question that I have is, what is a normal, usual, expected amount that a municipality, especially of our size, what would be a expected amount of restricted reserves that municipality has?
Okay, good question. Thank you for asking it. The reserves that we have to have as an organization covers a few things. Firstly, is like I mentioned yesterday, we have to have enough reserves or cash in our bank so that we can deal with the cash fluctuations that happens through the year as cash comes in. Okay, that number itself, rough calculation in my head, I said, if I would say I would feel comfortable at least. It might not be the full amount, but at least if we have $10 million set aside just for that. Okay. In terms of your property tax numbers itself, we can have a stabilization number in there if there's going to be a significant change that we may have in terms of taxes coming in. We are lucky and unlucky in the same sense is that we don't have too many industries within our municipality as such. Larger municipalities, where there's lots of industry between the oil and the gas and the forestry, there can sometimes be challenges for the assessments on those businesses. A oil plant can all of a sudden, or the oil field can become delinquent, and then we lose those linear funds that we have on those kind of things. So that's why for that component we don't need that much. We need at least a substantial amount. For your asset replacements of our infrastructure, we have to have enough cash flow set aside to deal. That's also assuming that we have a steady amount coming in through for our replacement of our assets on an annual basis to replace these assets that's funded through our operating, and then the reserve for the that we need for the cash flow components only when there are major capital purchases that occurs in a year that we can deal with that spike. So you build your cash flow then or your reserve to deal with these kind of things. But that's very dependent on a very good asset management plan and system, so that you as an organization can say, over the next 5 years, we're going to do this, 10 years, we're going to do that. And then you can plan properly over what you're going to be needing, for cash flows. And I can bet the oil and gas industry would have that down to a T. Some municipalities are very good with that as well. Our municipality, unfortunately, don't have a very good, let's say, a below par asset management plan in place. In terms of, because no one can tell me what's going to be coming up in the next few years and which of these assets are exactly, and so on. So it is something that has to be rectified, and it is something that's being addressed by the organisation, because from my understanding, the asset manager has been advertised and final interviews may be hired already. So that will be used into to address that. And then also.
Sort of answers my question.
Okay, but there's a more.
Okay. Come on.
Sure.
Sorry. What I said was that sort of answers my question. I guess where I'm going with that is I'm still curious about, like, is there a number? And the reason, part of my question that comes from this is, as I have spoken with colleagues of mid-sized cities, and I talk about the reserves that we have had, there's almost been a surprise as to how much sits within some of our reserves. So I also wonder if you could clarify, because when you said reserves, what I heard was that cash flow, which is different than, say, restricted reserves. So I guess the balance in between what unrestricted and restricted reserves, that cash flow piece, and like what's that number? What's that sweet spot that we think a municipality would want? Is there a number that exists? Because again, I think you get different answers at different municipalities based on the conversations you're having. And for me, this comes from conversations that I've been having with colleagues at the MCMC level. Mr. Edney?
Sure.
Yeah, thank you, Mayor Dean. So I think the important thing to look at, and something that this organization has done, is we look 1 year forward. So if we looked in 2026 and we have, I think the number is around $17 million in reserves, and we have $53 million of debt capacity available, we're in a great spot to replace our roads, our sidewalks, our pathways. Our problem comes in, and I'm going to pick on recreation. The community's been planning on a rec center since before I was born, well, not quite that long, at minimum 10 years. And at no point have we ever set aside money for the city's portion of that rec center. All we've done is collect offsite levies, and the developers are only responsible for part of that rec center. So this is where these challenges come from of if we sat here organizationally and didn't construct a library is going to be the same idea, right? We're collecting offsite levies, but we're not putting any money away to fund the city's portion. So if that's why your question of what is a good number is reflective of what are you planning to do in the future. So right now, if council came out of this and said, you know what, the library can stay in the basement, people can go to Calgary and go to the current rec center, we're in great shape, right? Not great shape, but we're in better shape. But if we want to replace the bridge at its end of life in 4 years, if we want to build the rec center, if we want to move the library, if we want to complete all the offsite levy things, that's when now our reserve amount we have today isn't sufficient. And the numbers probably, as Mark is showing, should be somewhere in the $40 or $50 million range.
So if I may, this isn't about what little reserves we have. This is about, based on the financial position that we're in, and based on what we've heard from the community that they want A and B, based on needs that we have, second fire hall, the municipality, historically, hasn't had a great plan on how they're a foreseeable plan. We've known that we needed a second fire hall for what, 6-7 years at least, more than that, right? And so what I'm hearing is that this isn't about necessarily a lack of reserves in terms of a lack of reserves. It's more of a lack of a plan that has built up that reserve so that we are then able to utilize that funding to pay for that. Am I hearing that correctly, Mr. Edney?
Yeah, and thank you, Mayor Dean. And I want to jump in because the fire hall is actually a perfect example. I've used the two examples where the city has to contribute. The fire hall is 100% funded by the offsite levy. What has always been missed is that, let's assume the fire hall is going to be $11 million. We're collecting that money over a 25-year span. We only have $3 million set aside. So that $8 million needs to be made up somewhere. And in order to do that, we need to borrow money for that, which, like in the utility company, will get paid back by the offsite levies. But it means that borrowing capacity now isn't available for city needs in itself. So it's, again, you know, we've all heard it, and I heard it when I got in here, where it's big about development pay or growth pays for growth. And it does, but it doesn't on the same timeline as the development and the growth is actually happening, right? So eventually we'll collect the $40 million that is the offsite levy for the rec center, but we're not going to have that before we go do the rec center. And that's what's creating some of our challenges, aside from us also not having any of our own money set aside yet.
Okay, thank you.
And maybe just to finish off the question that you had, yes, I do agree with what Mr. Etnia said. We as an organization, in terms of operating, at least $25 million, and we don't touch it. We we are below that number. So to be safe, I mean, we don't just want to be having our reserves funds just to be able to operate our cash flows. We do want to make sure that we have funds available for the unforeseen and unplanned things that comes up. So we need to make sure that we have proper planning in place, and we can work out these numbers exactly. When we have a project that's coming up as a replacement, let's say, for instance, for the rec center, where the city is going to be needing $24 million or whatever the numbers for our portion of it, theoretically speaking, we should have had those funds in reserve already at that point when that transaction happens. Otherwise, if you don't do it that way, it means that the resident associated, a resident that was part of this, where the new development has occurred, and have bought a property with the offsite levy charge already inside of it for the rec center, when the debt is being taken out to pay off this this loan that was on it, technically speaking, that resident that paid for the offsite levy for that component is paying a second time as well for that. So that's why I say our approach in terms of the offsite levy should be the following: when it's going to be funded from the city, those funds should be ideally be already available. Otherwise, we're going to make someone pay twice, and that is. I mean, we can do it, but it's not something what we should strive for. And then in terms of special projects should be planned properly in advance, and then a plan should be in place so that we can get to that point where we can save the funds. So that reserve is fluctuating based on the plans that council have and the anticipated cash flow that we anticipate to have at that specific point. If that answers council's question.
Absolutely. Thank you. Councillor Randawa.
Thank you, Your Worship. Through you to Mr. Edney, to the presenter. My question is, if, it could be, right? So what happened if the grant funding reduce or delay? So what happened to these years for the future? Because it doesn't seem like it's a very good financial situation. But if that happen, it could happen. And then what is the plan? And I just need the answer for that first.
Mr. Chair, if I may, the recommendation that I would have, for council is to, very good point, and thank you for asking, because it is something that will be to some extent be addressed as we go forward, but it is a significant concern. We have to figure out how to deal with this going forward. Yeah.
Okay, thank you. And I think I should pause here.
Okay. Yeah. Councillor Sambo.
Thank you, Your Worship, through you. If I'm understanding correctly, it sounds like for many years we've been covering operational costs with property taxes and other general revenues, and then collecting OSL for capital. What I'm wondering about is if those revenues have just barely been covering operating, or if we've been pulling from reserves, how has the unrestricted reserve been built up, and how could we theoretically take 1.7 out of a reserve that is unrestricted?
Two portions to that question. The one is your question will be answered later. And the second is I cannot present a budget to council that's not balanced. So in other words, I then, to present a balanced budget, I have to show where the funds is coming from. In this case, to at least have a balanced budget to start the discussion, I have to show it comes from reserve, because as Councillor Sambo knows, I cannot increase taxes on my own. I have to bring it to council first. And thank you.
But if we let you do it, no, I'm just kidding. Mr. Edney.
Yeah, thank you, Mayor Dean. I think this might be a good opportunity to identify, because I'm sure you've all seen it, but again, for public consumption, when we look at this, if the city took out all $58 million of debt, I believe we'd be somewhere in the neighborhood of about a $4 million a year repayment of that again is not accounted for anywhere in operating budget. When you look at what we're collecting on property taxes right now, that'd be about a 13 or 14% increase just to service the debt. So again, becomes a compounding problem, not just on the capital side, but then flows into the operating side, just now having to service that debt.
Councillor Grant.
Thank you, Mayor Dean. So we're forecasting a lot of cost here. So my question to you, Mr. Skokin, would be, there are potential developments on the horizon, and those developments will start contributing to OSL for these projects as well. So how are we recognizing that future revenue that may come in 28, 29 that will help us fill this hole?
If I might. Thank you, Councillor Grant. That is specifically about why I brought, the offsite levies that we anticipate that's going to come into the organisation over the next 5 years. I brought it already into these calculations. Okay. And the offsite levy model that we have is based on projected growth and that we see from going forward, and that's why such a team is able to give us then the numbers that we can use for budget purposes, and that's why it's already in here, and those numbers are in.
Okay, so that's future area structure plans that have already been approved, or is that taking into account possible developments that are on the horizon?
Possible developments that's on the horizon as well.
Thank you.
But, no, sorry, there's a giant but in that. If council doesn't approve any other developments, then there's no other OSL income, right? Like if council made a decision that we just went, no, we're not going to approve anything else, then there is no other OSL income, because essentially everything that we have on the books close. This isn't entirely true, but we can project out right now what those OSLs are based on the developments that have already been approved. But if this council for the next 3 years just said no to everything, then there is no new OSL investment into the city. Is that correct?
That is 100% correct. It is it is based on the anticipation of future development that we anticipate within the organisation. And if the development stops, it would be, my job would be significantly more challenging to figure out what we're going to be doing, because we'll be at a dead end basically.
Mr. Edney?
Yeah, thank you, Mayor Dean. Again, another probably good point as we get into the rest of the presentation, I'm assuming after lunch. There's some big financial risks in front of us as well. If development slowed down, then this model doesn't work for how much OSL we're collecting. If development slows down, it also decreases the amount of permit fees and stuff that we rely on in our operating budget. So it's a great question, because it leads into what are those risk factors we have going forward. We're lucky in a way that we've experienced such high growth in the past 5 years. That growth has been able to pay for existing, if I can use that term. I hate to use the term Ponzi scheme, but it's very similar right now. And if that slows down, we become in a bigger challenge. So you've identified a very clear challenge that this community has is the community wants all these new things, wants the infrastructure, but doesn't want development. And we can't have both. So it's something to keep in mind as we walk through the next couple of days of what that looks like.
Councillor Sambo?
Thank you, Your Worship. I want to respectfully just push back on that comment, because I'm not sure that it's fully, I'm not sure which direction you were going with that. But if I'm understanding correctly, the real risk would be if developments that are already incorporated into this forecast were slowed down or stopped, right? Because then we wouldn't get the planned OSL for projects. But a new development that is not yet considered in this model it really is not factoring into any of the projects that are currently planned. Because a new development that would be incorporated into these projections would also bring new population, which would be changing the scope of the project we would be charging OSL for.
I'm with you. That's what I thought that up until the question was asked, so maybe I misunderstood the answer. It sounds to me also projected growth in terms of what isn't possibly approved yet is already in this model.
That's
Correct?
Right. Yes, 100% right, Mr. Chair. Maybe just to put it in context, Councillor Sambo, is that if we work the offsite levies only on the approved areas that we know now already, let's say 2 neighbourhoods, for instance, what we try and achieve with the offsite levies to say what's going to be the growth of the municipality over the next few years, and then we'll say, okay, over the next 20 years or 30 years, the model calculations go as far as 50 years, into the future to see what's going to be. And the reason why we do that is to say, when you have a rec facility and the offsite levy component to that is going to be $40 million, just the offsite levies, none of our new developments within the municipality would be even coming close to cover half of that number. So we have to project way forward in the future so that we can see what's going to be the new development, so that when because those individuals that's going to be developing that future will have the benefit of that, us constructing those infrastructure today. And that is the reason why we do it so forth, and to make it a very more stable and longer view in terms of it. And so yes, it is a way of looking forward and not just a short-term view that we take on it.
So if I can, this includes everything that's in the current offsite levy bylaw. It would have to.
Yes. Yeah.
So really, we're only talking about things we're forecasting in the offsite levy bylaw. So anything outside of that, the only risk is a new scope for a new offsite levy for a new project, because it would increase population.
Mr. Eddy?
Yeah, thank you, Mayor Dean. I've conferred with Director Chandiok here. So all of the city's land base is accounted for in the offsite levy bylaw. Some of it isn't planned for 20 years because we don't know. Things that we know are coming, for example, Truman's development Edgewater, is in there, and it's up, even though it hasn't had an application in front of us. We have a suspicion based on news stories and their comments that that's coming soon. So all of that is already accounted for in the revenue side. On the expense side, we're also accounting for all of those things to service all of those communities. So when we talk about rec actually has a phase 1, a phase 2, and I believe a phase 3. Phase 1 is, of course, what we're contemplating right now. Phase 2, I think, is 15 years down the road. And then phase 3 is like 30 years down the road. So we're accounting for it. The challenge that's coming right now is with our growth, all of this stuff starts to get accelerated ahead of time. But yes, a risk would be now we identify new offsite levy projects that need to be done that then get put into the model that then increase the expenses. But that's why the model's adjusted every year. Then our revenue and our collection per hectare would go up. And that's why offsite levies tend to go up every single year, is now as we capture better costs and more inflation and a better understanding of our growth pattern, somebody needs to catch up to pay for that to make sure we have enough money in the long term.
Councillor Grant?
Thank you, Mayor Dean. Through the chair to administration, Mr. Edney. Just for my confirmation, is all the land within our municipal boundary under our OSL model? 100% every area has an OSL calculation contributed to it, to our overall model.
Mr. Edney?
Yeah, thank you, Merdine. Yes, that is correct.
Okay, thank you.
It just is a timing in the model of when we expect the development to happen.
Totally. I'm just trying to wrap around the larger picture of what's contributing to this and just what are our avenues.
Okay.
Mr. Chair, so basically, and considering time associated now, and going into the next section, I think it would be most beneficial if we can start that clean and then give council something new to think about after lunch, if that's okay.
Great. Oh yeah. So with that, we'll take our lunch break, and we will come back at 1 o'clock.
Thank you.
Thanks, everybody. Good afternoon, everyone. Just coming back from our lunch break here and now continuing on with our presentation. I believe now that we're moving to the next section, which I believe is going to be operating revenue. And again, this is being presented by Mr. Skonkin. Good afternoon. Oh, I should turn a mic on. Oh, Mr. Edney.
Thank you, Mayor Dean. Just before we move on to the next slide, we're not talking, of course, today about the utility company, but just for council's awareness and the public's awareness, this slide on the screen right now, we have a very similar slide for the utility company. We talked about the utility company has $25 million in offsite levies due to it from the city. It has a $59 million capital program in the same time. That needs to be bridged. So it is facing the same challenges we are here with not having enough cash to fund all the offsite levy projects in the utility. Again, it'll require some borrowing on the utility side. So just something to think about as we go through the afternoon of the utilities facing the same challenges, but we'll talk about that in our later discussions when we talk more about the utility.
Thank you. You're up.
Thank you, Mr. Chair. So this side of so the afternoon session, well, what we're going to try and do is now this morning, we looked at the financial position as is. We looked at the budget that we have planned for the coming year, and I also showed council the cash flow forecast that we will have should we continue with these projects and with our current financial plan and structure. The afternoon session, what I'll be doing is I'll be giving council some indication as to how did we get here in terms of what I can see in terms of, the data, historical data and so on. And then also, at the end to show what is a possible solution that we can have should we rely on taxes itself. And at the last portion of it, we'll hand over to Mr. Edney, and he's going to wrap up these budget discussions for us on there. So first off, we're going to look at the revenue for the city of Chestermere, and so the revenue numbers that we have here is the operating revenue that we received from 2020 to 2026. These numbers I got from the financial statements from 2020 to 2026. I actually went and typed all of that in to have a comparative number, and then what council can see here is that the blue bottom line is our municipal taxes. The municipal taxes from our organisation stayed fairly flat from 2020 till 2023, even though we knew that there was growth there. And the reason why it stays flat is that as we had growth, taxes got decreased. In other words, or the tax rates got decreased. So in other words, your net tax stayed flat, and you didn't have any opportunity to grow with your growth that you basically had. From 25 to 26, your council can see that all of a sudden we start to move away from that flat line scenario, and that is because in 25 and in 26, the taxes didn't decrease, in those 2 years. So in other words, now we were able to follow the trend that these growth numbers had coming through. The other significant component that I want to point out to council is the orange line there. That's the second bar from the bottom, and that would be all the user fees and goods and so on. So those would be all the other significant revenues that we get outside of taxes. And council can see we were able to fund the shortfalls in terms of our operations from a tax perspective. Then it was covered from these other user fees and so on. An important point to mention in that itself is that a significant portion of those numbers relates to development levies, development permits, utility permits, and so on. And then also the interest that we received on our investments from, in 2025 it was above $3 million, but we stripped a few out of it to just to place it at different places. Now, when we go
So, just really quick on this. I can already hear the residents some residents talking to me about, and this is what we hear, door knocking, right? And so we look at these 2 bullet points. We look at what happens here. Municipal tax revenue remained relatively flat through 2023 despite inflation and service growth. Increased user fees helped. So we see these 2 bullet points. And I think that obviously we know, having read the presentation and kind of already conversations that we're having today, where this is going. If I was out door knocking and I started saying these things, and if I was at a community event and I was saying these things, and I was at open house saying these things, residents are going to say to me, okay, yeah, but you had a surplus. So how as we have this conversation, and maybe this is one of those put a pin in it, we park it for later conversation. I think Mr. Edney has briefly spoken to it this morning a little bit. I think you're hinting at it when he made the comment about, yeah, if we compare 2024 to 2025 and 2025 to 2020, sure, that if we're going to year, it looks really good. But there's a concern about the asset management piece. So I guess the conversation I have as this conversation unfolds is, how do we deal with that tension point of, yeah, but there was a surplus?
Yes.
Mr. Edney.
Yeah, thank you, Murdy. And I think as we start going through the next few slides, we'll talk about that, of why the surplus is happening and what the risks are to where that surplus comes from. So I'll maybe wait for my comments until we've had a couple of those slides, and then if I need to add a little more insight, I'll do it at that time.
Thank you.
Mr. Chair, I do want to say that it's a good question because it's a logical question. You know, why is it that you say that you need money, but yet you have extra money in it? When we refer to surplus, just to make sure that we understand where we're starting from, the surplus that we refer to is surplus in terms of what we budget and what we got in. Okay, we know already that in terms of what we in our operating, we don't have anywhere in there really for our asset replacement or refurbishment of our assets. So technically speaking, we have a surplus in terms of the operating cash components, but we are excluding quite a few items that is essential for making sure that we have a sustainable municipality. Okay. Now with the following slides, I'll give council an explanation and show where everything is, and then it might answer some of your questions that you have already. But again, moving over to the next slide, 2 things. The tax rate or the property taxes there is a significant one, and the other one that I'm going to be dealing with is the user fees and services that we're getting. All right. So the user fees slide here at the bottom. The first bottom line there is, you can see, is the general government. I think council did ask earlier, where do we account for the the revenues that we're getting from the utility company to cover off the expenses that we incur as the city on behalf of the utility company, and that is basically the line that is there. The blue line, which is the biggest portion there, that relates to the development related revenues, which includes a building, utility, and development permits number there. A very important point that I want to point out to council here is, have a look at the blue, the blue bars as it's moved there. As we grew and we had this fast development in our community happening, that curve went up. But it seems as if we've reached a peak, or getting in about 2024 in terms of these fees, and there seems to be a steady decline in that line. Is it a trend or indication of us that the development is slowing a bit down in our community? Possibly, but I can't say that without any doubt. Then in terms of 2025, the green component or the green bar that you see there, that relates to the golf course revenues, and that is new to 2026. And that is why it's showing there. And again, as I've mentioned to council before, the understanding that we have as an organisation and planning for the golf course is to make sure that the golf course would be self-sustaining and in terms of the long run.
Mr. Redney.
Yeah, thank you, Mayor Dean. I think I just want to highlight one more thing on here, just to what Mr. Shonkin is talking about. You know, when you look at 2024, planning and development fees are contributing about $6.5 to $7 million in here, and that growth has essentially, if you look at the size of the bars, tripled from 2020. So, to some of these conversations of how we made up the difference, well, we had an enormous growth in the planning and development, but when we come to surpluses, it's not prudent of us to budget $6 million every single year, because we did see in 2025 that slowed down. We're expecting to see it slow down again in 2026. Without any new indications, I'd expect it to slow down or remain the same as 26 and 27. So the more we rely on those user fees, the more we subject ourselves to these wild swings in our perceived surplus. Because as Mr. Shonkin mentioned, surplus is only related to what we expected to have happen. And our expectations for those building fees is we cannot sustain $6.5 or $7 million a year of development permits.
Thank you, Mr. Chair. So maybe just to continue and to wrap up on the, on this specific slide, it would be when we budget, especially in a municipal context, we want to make sure that we budget on stable forms of income. The development levies and all the the development permits and building permits and those kind of things is an essential part of municipal government, but we cannot be planning or budgeting on the high months or the high years of the very good years and assume that's going to last forever. Maybe an alternative approach that we could have followed or should have followed in the past is to recognize this, and when we have these abnormal spikes associated with these non-recurring revenue streams, take those funds, put it in a reserve, and use it in for special projects that we may have that can be related to, to development and so on, so that you basically put the money back where it's coming from. So that's just a side note on it itself.
Sorry, to be fair to that point, though, isn't it also part of responsible budgeting, though, is you forecast based on some expected outcomes as well, though, right? Like in any budget, whatever organization you're talking about, part of what you're doing is your best educated guess. But that educated guess is based on substantive information. It's not like I'm picking a number and sticking it on the wall. It's based on a lot of, so to be fair to that point, though, while there may be wild swings, I think also at times, Mr. Eddy, correct me if I'm wrong on this, I also think at times we have deliberately been conservative on some of those numbers because of that spike. And we at times have been surprised by how much came in on some of these unexpected things. But we were conservative on the front end of some of that budgeting. Mr. Eddy.
Yeah, thank you, Mayor Dean. Well, specifically, 2025 is a good example of where we were conservative. Our friend down south put on his tariffs, and we had no idea how that would impact Canada. We had no idea how it would impact development and sentiment moving forward. So we did conservatively budget. And I think back to Mr. Shonkin's comment, it's easier for us to absorb more revenue than it is less. So to your point, we're not going to budget $1 million if we think we're going to get 6. But if we're hoping for 6, let's not budget 6 or 7. Let's budget 5. Or right. So I think in fairness, that's been our general practice since I've been here is let's put in a realistic number that we can meet. And then if we happen to do better, life is good. But if we don't meet that, it now doesn't impact us that negatively that we're now pulling things out of surplus or something like that. So it's a unique challenge in a rapidly growing city where these surpluses are more likely to happen. If we were a stable community growing at 1% a year, all we have to budget for is inflation. That's relatively easy. But to your comments earlier, when we're growing between 8 and 14% a year, that range is a huge range. And figuring out whether it's going to be 8 or 14, that's our magic challenge. And I think we try to tend closer to not 8 or 14, but somewhere in the middle. So the negative impacts aren't as bad if we do have those.
Yeah, thank you. I guess for me, my two comments are related, right? Yeah, but you had a surplus. And yes, it is an unreliable source to be hedging your bets on. And it is prudent for us to at least consider, because we are going to get some revenue in from those other streams. So I guess for me, I absolutely appreciate the picture that you're painting and what's being done. And I guess part of our job too on this side of the desk is sometimes balance is the wrong word, but it's like a other perspective, I guess is what I'm looking at. Cause I guess it's always, it's consistent with that touching point that we feel as elected officials, right? In that, a conversation I had with a colleague yesterday about the unique role that is in municipal governance in what we do and how we approach a problem and how that looks. And there's always that added factor in us in that we are so unique in how any company runs, because we have all these shareholders that have all these competing priorities that we have to listen to, as well as how do you pay for everything. So I guess that's where I'm going, is I just want to, I think there's a middle ground too that I think we should be discussing.
100%, Mr. Chair. And maybe, an option for the middle ground would be, is if we had a decent reserve associated with stability on this, then we can budget a little bit more optimistic. But because we don't have a reserve there, we would be unwise to start budgeting for something to the optimal number when we don't have anything to back it up, should we fall short of it.
Thank you.
And therefore, maybe when we have these surpluses, put it in there for stabilization of the organization. Now, the taxes itself is going to be a full discussion a little bit later, so I'm going to be moving over to the expenses side. Now, in terms of the operating expenses, as I mentioned to council yesterday, our staff-related costs basically is being covered by our taxes. So, 29 million in taxes coming in, 29 million in staff-related expenditures. That is a very high number. I mean, as an organization that we do service delivery, and it's normal for for us as an organization to have a very high staff component. What is not normal is the discrepancy that exists between taxes that we get in terms of our expenditures. It is not supposed to be this close to the your salaries component and your taxes coming in, because what about all your other expenses that you then have to properly budget for going forward? So what we're going to be going through now is, as we go through the next few slides, we'll be analyzing what happened on the salaries and wages side. We'll be looking at the contracted and general services, and then we'll also give council a better understanding as to where things are, why did certain things increase, and why we are where we are today. And okay, this slide here gives a breakdown for council, and council can here see which departments, if I can use that term, where the salaries and wages has increased substantially. The three areas of significant growth there related to protective services. The other one is planning and development, and the third one is then general government. Okay. Planning and development, I think it's basically self-explanatory. As we grow so fast, all the planning staff that's needed to cover and then to deal with all this growth that we have in the community. Therefore, that growth component is in there. In terms of general government, there has been some changes in terms of the management components in the organisation in terms of that. So therefore, you see the planned increase that's there for 2026. But the biggest growth in terms of salaries and wages that we experience in terms of total cost number of our organisation related to protective services. Protective services, mainly two areas that's there, and that is fire services, and the other one is our CPOs. Now, there's not, in terms of fire-related staffing and options, municipalities basically have two options, to deal with it. If you have to build up, the fire station, the other one is either you have full-time firefighters or you have part-time firefighters. Okay, rural communities make use of part-time firefighters, which is about 2.5 times cheaper than a full-time firefighter. But we as a city is different, and then we're probably here for us. We as an organisation or as council might feel the need to work on a full-time firefighting basis. Therefore, and with the second fire station coming or planning to come online in the near future, there's going to be an expansion in terms of firefighting services needs associated with that component as well. Firefighting services within municipalities, rural and cities, is a significant issue throughout the province. All the municipalities I've been in, it has always been the one item where that was most controversial between a city and a rural community or a rural municipality as to how do they balance these related costs between them. And I don't see any different for us as an organisation that is probably going to be a number that we can explain it to our residents because it's an essential service. And do we want an essential service to be available in our community? And it also contributes to the development, as I understand it to be, if you have proper firefighting services within your community. Okay.
Would it also be fair to note that the fire union deal that was signed would also impact the jump that we saw in the 2023 to 2024? Would that would also have an impact there, would it not, Mr. Edney?
Yeah, thank you, Mayor Dean. Yes, that's the biggest driver of those costs is when the union was formed in here. When we compare to, and you'll see it in a couple slides, when you compare to the other cities, nearly all of them have the same union type of contract. So we are all exposed, as Mark said, to the same pressures from the protective services side. Yeah, but that's what contributed to that big jump during that time period.
Thank you.
Now, council will notice that there's quite a few slides in this presentation where I refer to per capita, or I do comparatives with other municipalities. When I do these numbers, I use the province's website, where they have all the information between all the different municipalities and so on. Now, the graph here shows the highest paid municipality in terms of per capita, which is the top line there. The blue line is the median per capita, and then the yellow line is the lowest per capita within the province. So these are all comparisons with cities. So per capita numbers, we compare cities to cities to see what the numbers are. And you can see the city of Chestermere is very close to the bottom of the line. It doesn't necessarily mean that we are underpaying or overpaying our staff, or whichever the case may be. It is just a ratio how it's been calculated, and it's one additional tool that we as an organisation have to make decisions on, and it's not the beginning and end all of all.
Is there a way? So you said you did cities to cities?
That's right. Yes.
Okay. Is there a way? I know it would be slightly different, but for us to do that comparison for the group that's the 24 municipalities that are a part of mid-size cities, because while the name may be a little misleading, mid-size cities includes Strathmore, town of Okotoks, town of Cochrane. So town of Okotoks and town of Cochrane, for example, would have similar population sizes to us, right? So I get the per capita piece, but I'm a little curious about if we're comparing cities to cities. So Airdrie's 3 times as big as us. I can keep going down the list. Everybody's the lowest one I think is 3 times as big as, well, Medicine Hat would be double us, right? So I'm just wondering on that piece when we were talking about comparison of cities to cities, I wonder would this graph at all change if we use the 24 municipalities of mid-sized cities?
Possibly.
Mr.
To that. Yeah, Mayor Dean, appreciate the comment. No, not materially. So I think when you look at cities, sure, you've got Lethbridge and Red Deer and Medicine Hat, but you have Beaumont, you have Stony Plain, or not Stony Plain, you have Spruce Grove. In that list, and we can see it when we start to look at tax rates in the back, it's generally the same, right? If you remember at interim budget, I did this same thing and it included all of the MCMC cities. The average number of employees, I think it was per 100, in that entire group was 8.3 and we're at 6.3. So you're going to see, like, there might be a minor tweak to some of the dollars, but the relative change is it's not going to move us into the middle of the pack.
Thank you. Councillor Sambo.
Thank you, Your Worship. A question through you. Did I hear correctly that this was pulled from the Alberta website?
That is correct, yes.
Do you know what data they're using for population? Because I know in some places of that website, some of the data is based on outdated population information, like the last federal census.
That I can't say because, I mean, I assume that when everyone submit the FIR information, that it's based on the information that they have at that specific point. So the validity of the different municipalities in terms of their population sizes, I cannot say. I mean, we trust as they submit the information FIR that those information is as accurate as they have it at that point.
To your point, though, given our growth, that could move us from bronze to off the podium, so to speak, in terms of looking where these lines fall right now, right? Because if they're using last federal census, we already know that our number is much higher than last Fed census. Think so? Mr.
Yeah, thank you, Mayor Dean. So if you go to the regional dashboard, it doesn't work just off of the census data. In fact, the regional dashboard actually has different numbers than our census data even does. So it makes its own general estimates to try to make the data representative and reflective. So it's not perfect, but it gets you within what I'd call a rounding error tolerance for each of those data points. So to your point, ours actually I don't think would be lower because that same data is reflective and updated. Yeah.
Thank you.
They have a system in the background that helps make some of those estimates if people aren't doing censuses every year like we do.
Councillor Grant.
Thank you, Mayor Dean. I just wanted to confirm what I heard, that this was all cities. So like smaller cities like Lacombe, Leduc, those ones that are smaller than us are included. They are?
Possibly, yeah.
I'd prefer more firm than possibly.
Well, if I may,
Please.
when I extract this information from the province, it doesn't give me the listing of all the cities from the model work that I used. That's in there. So it would be, but I can also say that the way that the province do compile these comparatives is that they would look at various things. So they would look at your tax base, the size of your organization, and so on. But on the side, we are also compared to it, with cities like Red Deer, Calgary, and Edmonton as well. So in terms of economies of scale, when we look at it's usually the larger your municipalities, the lower your cost per capita theoretically should be because it's being spread more evenly, and some fixed components can be spread amongst a larger group versus a smaller group. So when we as an organization, considering what I just explained to you, sits at the lower end, it means we are possibly even lower than what we are supposed to be. So all other items. So that is generally how I would understand it to be. But again, exact numbers is hard to confirm.
Mr. Edney.
Yeah, thank you, Mayor Dean. Just thought I'd look up some information while we were talking about. For reference, the dashboard that Mark's working off of had Chestermere's population at 31,671. Our census said 32,255, so 600 people off, but it's not materially
Yeah.
off just because they use a different method and a different time. Ours was a point in time during the year. Theirs is trying to sort of make a best guess for the entire year.
Thank you.
Thank you, Mr. Chair. There's another slide that I prepared that relates to salaries and wages, and I'm not sure if this is the time that Mr. Edney would like me to discuss this now, or should we wait maybe a little bit later? Because the only reason for that is it's not part of this presentation because it relates to personnel items and the union agreement hasn't been signed yet, so it might be a sensitive topic to discuss at this point.
Witnessing what happened earlier between how we were asking questions or not asking questions, I'm not wading into that. Mr. Edney, how would you like us to proceed?
Yeah, thank you, Mayor Dean. I do believe we have a closed session item on the agenda package. I think right now would be the perfect time to talk about it, so I'd request that council go into closed session. It shouldn't be long, 10, 15 minutes max,
Okay.
and then we can come out.
Well, that would work well too, because even if we look at, say, a 20-minute mark and then take a break after, that would work out really well.
Yeah.
Okay. So can I have a counselor make the motion, please, to go into closed session? Counselor Randhawa.
Thank you, Your Worship. I move that the council move into closed session at 1:37 p.m. to discuss the following: 2026 Operating and Capital Budget Access to Information Act, Section 29, advice from officials.
Thank you. Call for the vote. Councilor Worzanowski, do you vote in favor?
Yes, I vote in favor.
That's carried unanimously. Thank you. Thank you. Can I, we're just coming back from our closed session. Can I have a counselor make the motion to move out of closed session, please? Counselor Schindler.
I move that council come out of closed session at 2:37 p.m.
Call for the vote. Counselor Worzanowski, you vote in favor?
Yes, I vote in favor.
Thank you. We'll take a quick 10-minute break and come back at 2:50. Thanks, everybody. Good afternoon, everyone. Just coming back from our quick break here after our in-camera session, and we're going to keep moving forward with our conversation related to budget. So, turning it back over to you, Mr. Shonkin.
Thank you, Mr. Chair. To continue in terms of the expenses, the next item that we'll be looking at will be the protective services per capita. And again, here, this is, as I mentioned to council, this is the information that we get from the province where we compare with other municipalities. It is just, for us to get some comfort in terms of where we are, in terms of the overall in the province for the cities. And this is probably one of the graphs that we as a municipality look much more in line with other municipalities, cities. We are still below the median per capita, but as council can see, is we are not at the bottom again in terms of certain expenses. So we're a little bit more up, and it looks more positive in that sense. Now, in terms of the contracted and general services, here is just the more detail of it. I did mention to council before, and we did have a discussion that the biggest cost drivers here in terms of the general government expenses there is the insurance software licensing, the View Handibus, Max Purple bus services, and then the property assessments. And with the golf course coming in there in terms of expenditures, because it's operates in terms of a contract with an external party, and that's why it's falling under contracted and general services in this case. So in terms of contracted and general services per capita, I just want to point something out to council. Although there are 4 index markers there at the bottom, there's only 3 lines, and the simple reason for this is the minimum per capita and Chestermere is exactly the same line. So that is just for information. And then also we did a calculation, for 2025, because we don't have all the other municipalities' information available. It looks like our cost per capita in terms of contracted and general services for 2025 was about $251 per capita. Now the next one is recreation. Yeah, I know it's a very, very important topic for council is the recreation, and as council have mentioned, talking about the number of motions that you have made as a collective group to promote and encourage new recreation within the community, and us to focus for us to spend more money on it. Here, council can see that per capita again, the City of Chestermere is very close to the bottom. Sometimes the bottom, and then there's few fluctuations there, but our cost per capita that we spend in terms of recreation is very low compared to other cities in the province.
Mr. Edney?
Thank you. I just want to clarify, because there was a question in the group chat. When you don't see the Chestermere line on the last 2 graphs, it's because it's hidden behind the minimum per capita line, because we're the minimum per capita. So it's on the graph, it just gets hidden with the 2 colors.
Thank you. Just really quick, I'm wondering why they're... Never mind, I answered my own question. Because it only goes up to 2024, it doesn't include 2025. Never mind, I'm good.
Thank you, Mr. Chair. So we're going to be moving over now to our taxes, and to have a look and see what has happened with our organisation. Show council in terms of the property taxes, what's going on there, the history on it, and and some comparative information as well, so that we can get some idea in terms of that for the organisation. So the first graph that I would, chart that I want to point out to council here, Firstly, we'll look at the operating surplus, and as Mr. Chair has mentioned earlier, that we get from residents to say, oh, but you have a surplus in year, so how can we raise taxes? This is the summary of that. So council can see that in 2020 we had 5 million operating surplus compared to budget. 5 million surplus. 2021 it was about 1 million. 2022 all of a sudden there's a quite substantial surplus that we have there, and some of the discussions that we had, and to indicate where there was a bit of a disconnect that occurred at that point there. 2023 the operating surplus was a little bit lower, and 24-25 that trended upwards. However, in 2026 we're projecting, as things are now, that we will be running a deficit, and that's why we have to transfer the funds from the reserves to make our balances balanced. The net financial assets is a topic that I've discussed with council quite a bit already in the past, over the past 2 days, and that is basically our real funds that we have available as an organisation in terms of reserves and doing some of these activities. Council can see how our net financial assets increased up to 2024 and 25. There's a significant downward trend on it, and that is purely because of the capital purchases that we made in 2025. When you just think about the golf course, the rec land, and so that is those are the numbers that pushes it down. This graph here, the purpose of this one is the net financial assets that we had. This is just breaking it down in terms of the reserves to give council an indication where the money was taken from and where it was moved to. One of the points that I would like to point out to council here is up until 2021, we had an infrastructure life cycle reserve there. It disappeared off the books in 2022. And that is the reserve essentially that I was referring to, is where we would use those funds to account for the cash flow fluctuations that we would have to replace our infrastructure over time itself. So that's not there anymore, and we have to make work then with the other reserves.
Councillor Sambo.
Thank you, Your Worship. The question through you is, disappeared to where on the books?
We removed it and transferred the funds into General Stabilization Reserve. For some reason at that point, the decision may have been made that that the city doesn't need that reserve.
Thank you.
Okay. And again, I did mention to council before, as our financial assets and reserves going down, this is just to reiterate or to highlight to council, as we are where the numbers sitting in all the different reserves for 2025 and where we project to go in 2026. The reduction there is because we say that we're going to be using about $1.6 million, let's say $1.7 million, to fund the operational shortfalls for 2026. Now, in terms of the assessment and taxation, this graph here is to give council an indication as to what has happened with our assessments. The graph consists of 3 lines there. One is the assessment growth. We have pure new assessment coming in. That's the one that I refer to as pure assessment. And the next one is the property inflation, and then those two together make our total assessment growth number. The property inflation number that council see here is the actual value of a property in Chestermere, how it has changed over the past 10 years. What we did was I asked Tammy Vaughan, for me to get properties, and she ended up getting me 40 properties within the city of Chestermere, and have a look at them over the past 10 years. The condition on those 10 properties was the property must be today exactly as it was 10 years ago. So in other words, we don't take into any improvements. If it was vacant land and now there's a building there, disqualified. We have to make sure that we can clearly isolate the inflationary components associated with properties. Now, in 2020, it started, and we could see that there was already we started to make a significant uptrend in terms of our property inflation numbers. Also, that has happened at the same time there was some substantial growth that has occurred within the municipality on these properties. That's why all the development taking place. Property has the demand obviously for property has increased significantly, and that on its own pushed the prices of the existing properties up as well. This graph, looking at the tax rates through the province for cities. The cities, the bottom. So, well, obviously we have to. I brought Calgary in here because Calgary was the lowest for the longest time up until 2021, basically, and then the city of Chestermere, as you can see, it looks like we just off a cliff, almost there, and we became the lowest municipality or city municipality within the province of Alberta. The top ones there is those are other municipalities. Sometimes between Calgary. Oh no, sorry, not Calgary. Sometimes between Grand Prairie and the city of Wetaskiwin. Those would be the ones usually on the top. They make turns as to who's going to be the highest tax rates on those ones. The orange one is then again the median, and like I've mentioned, city of Chestermere compared, from 2015, and you can see how our tax rate continuously went down, and in, like I've mentioned, in 2021, round about there, we made a significant deviation from there, and now we are the lowest city within the province in terms of tax rates. On its own, when you think like a city of Calgary, for instance, they've got economies of scale. So in other words, the fixed components would be fixed, and the more residents they have, the more can reduce the cost per unit. In our case, it is not so. So theoretically speaking, it would almost be impossible for us to be lower than Calgary, just from a logic point of view, because we are smaller. We don't have the benefit of economies of scale. Plus, our need, being so close to Calgary, is probably going to be, to a large extent, very similar from what their residents need and what our residents need, to some extent. Obviously, there's going to be unique variances in terms of what each of those would need. So just the difference between the two. If we have to increase our taxes by 20%, we would be where Calgary is. If we do it 19%, we would still be the lowest in the province in terms of cities. Now, this graph is, I think, probably the graph that has the most meaning in terms of the property assessment discussion that we have. This graph here, look again at the property inflation numbers, CPI, and we look at the property tax rates from two different municipalities in our area, City of Calgary and Airdrie, and also Chestermere, which is then, I should have maybe mentioned there, but the residential tax rate is the green one, East Chestermere. Now, here's a very, very important concept that I would like to explain to council. Council must have heard quite a bit, or I've heard of it, through my career, lots where we would hear inflation went up, we have to increase our taxes. Now, it is true to some extent, but not the full truth. Okay, property inflation numbers over the long term always trends in the same line as CPI. What you will have is fluctuation that's always going to happen in terms of property values around the CPI line. Okay, certain things may also adjust if impacted, but theoretically over the long term you will have your fluctuations that has occurred there. Two very good examples that you can see here in this graph is the city of Calgary and the city of Airdrie. when the property inflation numbers went down, they increased their tax rates to make sure that they can still meet that that line on the CPI, for instance, now to make sure that they fluctuate on that line itself. When the property values, when the inflation on property values increased, in other words, property values now all of a sudden, same property next year is way more worth more, as we have experienced within the community, then we now start catching up to CPI, and then what has happened in 2022, we crossed the line there with CPI, and we are above now. And you can see what happened with Calgary and Erie. They went below the CPI line. So almost exactly replicas from one to the other. When one goes up, the other one comes down, and so on. It balances itself out. Now, to look at the city of Chestermere in terms of this graph, one council can now see where we decoupled from the principles of CPI and property inflations when we decreased our rates so significantly from where we were in 2014 to where we are today, with a decrease of about 40% in tax rates. So if we have to, as a municipality on a cumulative basis, want to get back to just to be on the balancing side that we have see there in terms of property inflation, we as a municipality, assuming that the cost that was there in 2014 was reasonable representative of our municipality, we have to increase property taxes by at least 40%. Now I know, but I think when I mentioned this to someone a couple of weeks ago as we were working through, they said start looking for a new job. So, just to understand the seriousness of the point that I'm trying to bring here to council, I understand it. Now, again, City of Chestermere, you could see we were fairly good. We were trending the same as the other municipalities, and then 2017, we moved away from it, still manageable, and then 2020 or 2019, 2020, it just seemed to go down all the way, and like I say, it is tough to increase taxes when the property value inflation goes up, because now you're going with that line, and you're not supposed to go with that line. You're supposed to go the other side, and that is why when property inflation numbers go up so significantly as done over the past few years, for any council, it would be extremely difficult to say, yes, we have to increase property taxes. But in that situation, the best thing that we could have done is just leave tax rates alone. But we didn't. We brought it down significantly, and now, as you can see from the graph here, both Calgary and Erie have increased their taxes because the property inflation number is trending down. So in other words, they need to stay in line, stay with the CPI graph as it moves up. So theoretically speaking, and I don't want to speak for other municipalities, but for them to continue to be, if the property inflation numbers trends down and it crosses the CPI line, then the other municipalities would have no other option but also to increase their property taxes, to compensate for this decline that has happened, to ensure that they can at least, as a minimum, keep up with CPI. Otherwise, they would not be able to pay their expenses as an organisation. So maybe I'll pause here for a second and give council some time to answer.
Yeah, I want to go back to the comment that I made earlier, and that is, yeah, but my taxes went down, and and the city made a surplus, right? And so I guess the overall question is, as we start to come out of our presentation and as we start to unpack the next steps of this, I think something that I think we all need to keep in mind, and I'm not sure what the interplay of this is going to be between administration and council, of how do we tell this story, right? Because this story is all well and good inside of these chambers, and for the 7,228 people that are watching on YouTube right now. But like, in all honesty, how do we tell this story to the 32,000 residents of Chestermere as we move forward? I think so. I'm not expecting a comment on that right now. When I look at this makes sense. It's logical. It's forward. All of that makes a lot of sense. The next step in this, though, is how do we explain that to that resident? How do we tell that story? Councillor Grant.
Thank you, Mayor Dean. Through our chair to administration, before you mentioned that CPI is adjusted to our local economy. Is that correct?
That's right, yes.
So what I'm wondering is, which CPI are we using in this graph, this inflation versus tax rates? Is that Alberta as a whole CPI, or is that adjusted to what Chestermere's CPI would be?
No, it is Alberta as a whole.
Alberta as a whole.
Yeah. Okay. See, but the property inflation is Chestermere specific.
Okay.
So one is Chestermere specific, and when the CPI, because cost drivers over the long term is pretty much in line with that's why it's, yeah, exactly.
Okay,
so.
thank you.
Mr. Eddy.
Yeah, thank you, Mayor Dean. I know you weren't looking for an answer to your question, but I think one thing that's important to remember, I know council gets it, I know we administratively get it for the public, is a surplus is only valid if you properly allocated your expenditures. So in all those years that we had a surplus, we didn't have enough staff, we weren't providing enough services, we weren't putting money away for the future. If we had done those things, we would have actually ran a deficit. So surplus is a very tricky thing to talk about because it's only relative to what you were planning, not relative to what you should have been doing. And I think that's been the point of the presentation today, is we haven't been doing what we should have been doing. So having a surplus artificially because we weren't doing what we were supposed to isn't really a surplus.
I'm with you.
We have a whole other session on how do we talk about this later once you've made some decisions.
Because I think, too, there's a difference between explaining something to an individual and explaining something to the masses. I think there is a difference in those two strategies. So just to comment, I think as we move into our conversations, I would love to just having administration making notes as to how we're going to tell that story. But obviously some decisions have to be made first before we tell the story. Okay, I have no other comments. Nobody else is lit up right now on my thing. There was, I believe at the bottom of this though, should that say inflation and declining property inflation in 2025? Is that correct, or is that declining population in 2026? Very last, the date.
No, very good point there. The tax numbers are based on the prior year assessment numbers.
Okay.
That's why I should have maybe clarified, and I thought I should mention to council, and I obviously forgot. So thank you very much for pointing it out.
Okay.
When I look at assessment numbers, tax numbers, I work on what is the number that's being used to determine taxes, and that's why I will look on because CPI is based on historically, property inflation based on history, and so on. So that's why I don't know. CPI for 26 is unknown. Those kind of things are unknown. So I work, and our assessment taxes are based on assessment as it was at the end of the year.
Okay, thank you. Councillor Sambo?
Thank you, Your Worship, and through you. I don't think it's been explicitly stated, and I know we will receive a presentation about assessments at some point, but the average home, did the assessment value go up again this year for the average home, not in aggregate?
Went down.
It went down? Sorry, did you say what number that was?
So the number that we've seen is about 0.7%, in the calculation that we had. So the assessor might have different numbers, but like I say, the 40 properties that we selected, well, the 38 that remain, those were about a 0.7 reduction in there, and that's why you see Chestermere's number well, sorry, the inflation number there, slight downward trend there.
Mr. Edney.
Yeah, thank you, Mayor Dean. Just to try to add some context on this graph, last year's, when everybody saw their assessment go up 12 or 13%, that's from the 2024 point. So when they get your assessment that we just got in the spring here, that's that 2025 point that went down. I think mine personally was about 2.5% or something like that on my house.
Okay, thank you. Okay, I think you still have a couple more slides here before we reach the conclusion.
That's right, Mr. Chair. So maybe this would be a good opportunity to give the tough discussions over to our CEO, Mr. Edney, where you can convince council to do one way or the other. But I do want to thank council's guidance and administration's persistence on that and advice as to how to approach this. Thank you very much. And also the finance staff that have taken quite a bit of load on themselves for me to be able to work on these things.
Yeah, no, I want to just echo and just say thank you to you. There's a lot of work, obviously, that's gone into this. There's a lot of numbers. There's lots for council to digest, and it is quite clear that an extensive amount of work has gone into this to get us to be able to have some tough conversations now. And also, kudos to you that when we got to the hardest part, you gave it back to your boss. So smart. Just right. So smart, Mr. Edmund. That's right.
Don't steal my water. Yeah, I think on that comment, Mayor Dean, I'm just excited that I didn't have to do the whole presentation by myself. So thank you to Mark, and thank you to everybody on ELT for the effort that went into this. I'm going to kind of finish this off because I think we've set the stage of what the ask of council to think about over whether it's the rest of today or tomorrow is. What do we do to get ourselves out of the situation we're in? So I'm going to cover a couple more slides real quickly. Just to kind of chat. And I think I want to preface this next slide with oftentimes we get caught up in large percentage numbers, right? And I'm not trying to downplay this. I understand the significance. I understand the impact of what Mark just explained. $1 is 100% of $1. It's also 10% of $10. And it's 1% of $100. I am good at math. Councillor Grant is impressed. My point being that people often hear things like 5%, 10%, 20%, and it scares you because you're thinking in big numbers. I'm not trying to downplay the significance of property tax, but on the average home in Chestermere, the property tax bill that goes to the municipality is less than 4% of the tax that household pays to the provincial or federal government in income taxes. This does not include GST. It does not include fuel taxes. It does not include liquor taxes. It does not include the myriad of ways that the higher orders of government take money from us. And I think this is a challenge that council faces, and I'm cognizant of it. We're the most front facing, right? You're the people that everybody gets to talk to every day, right? If I asked you where your income taxes went to, I don't know, defense, immigration, passports, those kind of things, they're not tangible. Where did my property taxes go to? Well, they went to running the library. They went to running the rec center. They went to sweeping the roads. They went to clearing the potholes. They went to providing services. They went to our community support team. They went to all of the things that we do every day that directly impact people's day-to-day life. This graph here, I am not suggesting we do a 40% tax increase, but I think it's here to put into perspective what some of these numbers actually look like. So if you did a 40% tax increase on an average house of $700,000 in Chestermere, it's $77 a month. That is still a significant amount of money, but it's not $2,000 a month. That property is still only paying $3,000 a month in property taxes. If you raise taxes today, 41%, $3,000 a year. Sorry, thank you, Councillor Schindler. If you start working down to something that's more reasonable, again, I'm not suggesting 20 is reasonable, but even you go down to 10, we're talking $19 a month. Again, I understand for some people that $19 a month matters. But again, what we talked about in some of our budget discussions is let's not make our decisions based off of those people that are impacted by that. Let's make sure we have support systems, gifts of kindness, things like that to help out somebody where $19 a month is what makes or breaks them. But when we start thinking about what you're going to do with property taxes, think about what $19 a month could do for that position that we just talked about of getting us where we can look after our asset replacement. You can build the projects you need to build. Is that worth $19 or $38 a month per household? I don't know. That's not my job. My job isn't to determine that. That's where council comes in, to get that feedback from residents on what are you willing to pay every month to ensure long-term sustainability of our community. Mark didn't hit on it, but Mark worked in a community where they didn't take care of that. And what happens is you run out of an ability to fund your infrastructure. A larger municipality has to become responsible for you. So again, not trying to be scary, but that's the reality of if council doesn't do something to start addressing this now, that's where we're going to find ourselves in 5 or 6 or 7 years. The alternative, of course, is just stop doing anything. Don't build a rec center, don't build a library. We'll probably be okay and find a way to do it, but I don't think that's what this community is asking for. So this graph is really just to show when we break down these big, large numbers, they're not that large when you talk about on a monthly basis on an average home. For reference, an average home to afford a $700,000 home in Chestermere, you need to have a household income of $200,000. So again, I'm not trying to downplay this for the part of the community that it does get impacted, but $38 a month on your $200,000 income to make sure the city is sustainable may be a trade-off that is worth it. It may not be. Maybe we need to find some other ways. And I do think we need to find some other ways other than just property tax. But it's just to put some of these numbers into perspective. Oh, we're already in conclusion. Where'd the other graph go? Oh.
You're going the wrong way.
No, I'm going the right way. I'm just going too fast in my brain. So this is that question. If we had more tax money coming in, what would we do with it, right? This is where we can help address some of our pressures where we've got costs that have outpaced our growth in taxation. We're not building our reserve capacity. We have $57 million in planned expenditures over the next 5 years. They're just the municipality's portion, not the offsite levy. So the offsite levy projects are a separate project there, right? The more we have to borrow, the more we have to put those servicing costs into the operating budget. Again, another potential tax increase to cover those. We aren't putting money away right now to replace roads, to replace sidewalks, to replace pathways, to fix parks. We're not looking after the new infrastructure. And again, not to cloud it, we're also not doing that in the utility company right now either. That's another problem we'll have to address at another time. So administration's request of council to consider this increased funding isn't just because we feel like it's something that other municipalities do. It is to go to tangible things, to plan for our future, to make sure we don't end up in a spot where we can't afford the things we need to afford. One of the questions I know that keeps coming up, and we've seen it even here today, is how do we compare to what's going on? So I just took this just to compare our local communities, Calgary, Cochrane, Airdrie, Okotoks. I put some of the other mid-sized cities. I didn't go further down the list just to put into perspective where some of the larger cities. I know we talked about, is it a fair comparison to Lethbridge? Probably not. Lethbridge is bigger and has 2.5 times the tax rate we do. Spruce Grove, Beaumont, in the same boats. Medicine Hat owns their own electricity company, their own natural gas company, and they're still at a tax rate double what we are. So if you compare on any metric where we are in Chestermere, as Mr. Shonkin indicated, we're at the lowest. A 10% increase still keeps us at the lowest. This isn't including increases that any of these communities have made for their 2026 budgets. again, I know we hear Calgary only had a 1.6% or 1.2% increase, but that's also because they've had 10% and 5% and 7% increases over these past 5 years that now they can afford, as Mr. Shonkin pointed out, as things are falling, they can afford to have a little bit less of an increase this year because they've made those increases over the past years, whereas Chestermere hasn't. Again, not suggesting we do 40%, that puts us at the top, but not at the top by a lot. A 20% increase in our taxes right now still puts us at the second lowest of all the municipalities in our area. Again, I understand and recognize some of those municipalities are providing other services, but this is to get the money in for us to be able to provide those other services. Our budget right now doesn't contemplate the operating costs of a new rec center, doesn't contemplate the operating costs of a new fire hall, doesn't contemplate the operating costs of a new library. This is just to try to fund some of that capital requirement to even get those built. Again, this is more for reference as you start thinking about what do we want to do this year and in the coming years to build that foundation to catch up.
Councillor Sambo.
Thank you, Your Worship. And through you, apologies if this question was answered because as I'm going back and forth, sometimes I miss a comment. So 1.7 million was what would be needed to take out of reserves this year. I believe that was the number that was presented. So at this 10%, I'm trying to figure out what increase would be needed to make that up. It looks like the 10% would make that up with a little bit left over. Is that correct?
Yeah, so we'd need 1%, 1.7% on 30 million, so we'd need about a 6%. Does that sound right? 6% to make up the 1.7. If I'm doing math in my head right. I didn't bring my phone up, but yeah, 10% would be 3 million, 5% would be 1.5 million, so maybe 6% to make up the 1.7. And again, this is anticipating about a 2% drop in everyone's property. So it'd really be a 4% change from last year on any of us who live in town. On our tax bill would go up about 4% because our assessment's gone down 2%.
Councillor Sambo.
Thank you, Your Worship, through you. The question I'm trying to answer is what do we really need with what we're trying to accomplish? So that 10%, and I'm not presupposing any opinion of my own, I'm still forming it, but that 10% would cover the transfer from reserves, and then there would be about another $1 million in a true surplus to move into a tax stabilization account or something like that. Is that amount sensible? Is that viable? Does that get us where we need to go to save quickly enough for what we're doing? Or is this 40% truly what we need to do in order to get where we need to be for what people are asking us for?
Well, I think this is a longer conversation where we can put some numbers down too, right? We looked at, I think, what was the deficit a few slides back was going to be, we were $40 million short over the next 5 years. Tells me we need to find $8 million a year from somewhere to make that work. Now, that doesn't all have to come from property taxes. We are applying for grants. We're looking for sponsorship opportunities, all that kind of stuff. But I'd respectfully say, without looking at it, that no, 10% isn't enough to start putting that money away to cover our part. We can borrow, and we've talked about borrowing. But again, as soon as we borrow, that in itself is going to be a 10% increase just to cover that debt servicing. So again, it doesn't need to be all 40% all at once. 40% would put us at about $12 million a year of extra income coming in. I don't think we need to go to that extent at this point right now. But again, the longer we push it off, the bigger those jumps need to be to fund the infrastructure that we're looking for. So I think Mark talked about it earlier. The general rule of thumb, assuming we weren't building new facilities, would be to put away about 60 or 70% of your amortization every year. And our amortization is about $7 or $8 million. $9 million of amortization. So really what amortization means is the useful life of our assets has dropped by $9 million this year. We should probably be putting $5 or $6 million away just to prepare for the future of when those assets need to be replaced. And we're not just talking roads, sidewalks, pathways. It's vehicles, it's garbage trucks, it's snowplow equipment, it's buildings, right? We're starting to get old buildings, especially over at ComOps and at City Hall. So, yeah, the realistic number that would be comfortable would be putting $3 or $4 or $5 million into reserves every year with the things that we have planned in the coming 3 to 5 years.
Yeah, my screen's blank. Oh, I lied.
I'll skip my conclusion slides because
You
they're
want-
more like,
well,
this is what we're doing anyways.
Well, no, that's what I was getting at. Was I was wondering if we wanted to finish, and then we're going to be extensive conversation coming.
Yes.
Councilor Grant.
Would you like?
I might go
would you like to
sit down
finish?
for the extensive conversation, so I got my numbers.
No,
in
no,
front
no,
of me.
no. You made Mark stand there all day.
Okay. I may go grab my computer then.
Am I jumping the gun? Is there a slide you'd like to finish? Or
No, I was gonna say there's some slides, but honestly, it's like we just talked about this, right?
Yeah.
The point of making the decision is plan for the future. The longer you delay these decisions, the larger these problems get. And we're trying to understand that there is a balance with residents. We're acutely aware, most of us on the ALT are residents, so we're in the same boat.
Councilor Grant.
Thank you, Mayor Dean. Again. Thank you, Mr. Edney. Great presentation. Great presentation by you and your team. I find it very trustworthy. I appreciate some of the analogies and best practices that were explained to us along the way. It's very enlightening. I know we didn't talk about CPI here before, so it's good to talk about how that relates to inflation and residential home prices. So thank you. Appreciate it. Good job. My comment is we've largely been looking through the lens of this of we have a problem or we have a potential problem in the future. And right now, I feel like we're largely being presented one solution, which is to raise taxes. And my question is that the only solution, or is there other options of looking at our capital projects, pushing them back to more reasonable timelines? What would those remedies provide us in the terms of relief?
Yeah, thank you for that question, Councilor Grant. I think you're going right down the path I was hoping this conversation would go. So at interim budget, and you can reflect on some of that presentation in there, we talked about administration being proactive, again, trying to manage our expenses, trying to look at where we can cut things from an expenditure point of view. I'm comfortable to stand here and say I think we've done a really good job of that. I can't find places in our budget where we have just a placeholder in case. There's a tangible thing that those are going to. So there's not a lot of room in that expense side of things to do something. What there is an opportunity for a couple of other things. And we talked about it at interim budget. Really pursuing grants, right? Pursuing grant funding streams for some of the things we do, but also for some of the new projects we're going to build. Looking at how can we access some of the federal money as we build our new projects. But again, those in themselves aren't going to necessarily bridge that gap. So I think when we talk about property taxes, it's more to put into context for council that we need to find that $5 or $6 or $7 or $8 million a year. How it comes in, our real only big lever is municipal property taxes. But to your point, don't shoot the messenger. Just an idea. If you didn't build a rec center, that changes this outlook completely, right? That's a $65 million project, of which $25 million is our share that we have zero funds set aside for. And then we have to borrow $20 million for the offsite levy share. That's $45 million of our quote unquote problem. Again, I'm not suggesting you don't do that, but that is an option. Fire hall, I think you need to move forward with that. That's 100% developer funded. Again, there's borrowing that needs to happen to make that happen. A new library. For example, in here, Mark talked about the fire hall budget's only $11 million, but we're carrying 17 million. I think we've got 11 for a library, and it's 25 in the offsite levy. The offsite levy for the rec center is only collecting on 43 million, but we're talking about 65. So there are big levers here to move. It's just what is comfortable for what the community is desiring, the community wants, and how far do we keep pushing it out? I mean, I think, to me, the rec center is the lightning rod. This community, as far as I understand, has been talking about this for 10 years. And nowhere in that 10-year time frame did anybody put money away for our share of the rec center, right? If you started today, started putting $3 million away for the next 10 years, you'd have your $30 million you need to build the rec center. But our challenge is we're talking about building it next year with no money set aside. So that's a challenging bridge to gap.
Councillor Grant.
Gap to bridge.
Thank you, Mayor Dean. Through the chair to Mr. Edney. You touched on something there, and it was the OSL and that gap in the OSL in our projects. And I hope I'm not letting the cat out of the bag, but as far as I'm aware, there's an increase coming to our OSL levy, our OS levy, drop the L. Is that reflected in the financial position in this document?
That's a good question. I don't think an increase, no. In the financial position in this document, we have to go with what we know today because we're going to propose an increase to the offsite levy rates, but council could say no.
Councillor Sambo.
Thank you, Your Worship. To the OSL, as we're considering this, I just don't see pushing any of these projects back as a real solution, because maybe you can do that for a year, but you do that for several years or 5 more years or 10 more years, and then again, it's just a change of scope. So we haven't solved the problem, we've just got a bigger project now. And I mean, we can change that all we want, but it doesn't change the situation. It just puts it on a different council, a different administration to solve that problem. Meanwhile, we've got another 5 or 10 years without the services that people are demanding. So I don't think it saves money. Might help with the venture, debt cost a little bit, but I don't think that's really an option. It would be really interesting to know what the intended new OSL bylaw is and how that will affect this, because to me, outside of the capital projects that we need to do, the most concerning thing to me is that we're not putting anything aside for replacement and some repair, but for the most part replacement, because that is so incredibly expensive. The other thing I really wanted to note is that we had roughly a 30% increase in the education tax this year, and that's eaten up a lot of what we could have increased in Chestermere. And that's a real problem. And that's all across Alberta. And we're fortunate in Chestermere because we have some new schools being funded from the province, so at least we're getting something for that. But that's eaten up a lot of what we could have done.
Mm-hmm.
Yeah, and if I may, I think that's one of those things, I'll work backwards from your comments there a little bit. We're not talking about the education tax because I think from my perspective, while I understand that's going to impact my property tax bill, we can't let it take away from what the municipality needs to do. It's terrible timing that the province is doing these things, but we can't make decisions to not do something that we need to do because a higher order of government is doing something that could perceived impact what we should be able to do. But it's a very valid comment. And again, it's this whole idea of how it's collected, right? It comes on the same bill from us. And again, even then, the education tax is like 3%. If Danielle Smith raised income tax rates 1%, nobody would blink an eye and put it all to education and it would go. But because it's so front facing, it's something we see every single day on our bills. The other problem that you were kind of hitting on there, this $65 million rec center that we're talking about building right now, we could have built for $40 million a few years ago, right? So you're going to run into the same problem. If we kick our $65 million rec center, and I'm just using that number because that's our best guess right now, you kick it down the road, well, it's a $70 million. Then it's a $75 million. Then it's an 80 because it's also exposed to those same inflationary rates that we're seeing. And in fact, I'd suggest on the construction side of things in Alberta, those inflationary rates are a lot higher than CPI. So again, to your point, you could push some of these projects down the road. They'll just end up costing more. And do you ever find a way to really catch up in that case?
Okay. Okay. Here's what I'm going to suggest. That concludes Edmund's presentation. Is that correct?
That is correct.
So the next stage of this would be to kind of open up for to start some general discussion amongst council and administration now, kind of wherever we want to go, which is fun. Correct?
Yes, I think originally at the start of the day, what I personally think the best thing would be to do is let's go focus back on those first 2 or 3 slides.
Yeah.
Let's hit off of the ads and
Yeah.
things to the budget and decide if we're okay with them.
Yep.
Because that at least gets that smaller.
Well, it'd be less
problem out of
scary
the
if
way.
we weren't on the same page all the time, because that's where I was going with
Oh,
this.
okay.
What I'm going to suggest is that what we do is we take a short break here. We'll come back at 3:50 with the idea then being that we're going to kind of time ourselves, and we'll have about a 40-minute conversation today with a aimed wrap up at about 4:30. I do know that a couple of our counselors have some really specific items that they want to bring up, and that might eat up the 40 minutes, if you will.
Yeah.
But I want to make sure that I provide that opportunity to those counselors that have already approached about having those specific conversations. So I'm going to suggest we take a short break. We'll come back at 3:50 and then open it up for the general conversation, and then we'll go from there.
Sounds good.
Okay, thank you. Good afternoon, everyone. Just coming back from our break, and now I believe the plan is we're just going to have some open conversation and discussion where we'll have people up on mics. Unless there's something specific, Mr. Edney, that you're wanting to present, if you want to sit, feel free, because I think that this is just going to be more of informal kind of conversation and things like that. So totally up to you if you want to hang out at the podium or. Because like I said, I think this is going to be much more informal. So with that,
Sit at the podium so I can move the slide.
So with that, I'm going to turn it over first to Councillor Sambo, who I believe has a couple of ideas that she would like to bring forward. So, Councillor Sambo.
Yes, thank you, Your Worship. I'm hoping that into the future we can start meaningfully as a city planning for the future. We haven't really done that for a long time, and that's something that needs to be rectified. One of the most important things that we're working right now for the present and the future is recreation. And we have a long-standing recreation organization that has expressed that it can't fully plan for the future because funding from the city of Chestermere is unknown sometimes or hard to predict. So as one of the only recreation facilities in Chestermere, I think that it would be appropriate to give some of that clarity and predictability to the CRCA. So with your endorsement, your leadership, I've sent Legislative Services a motion that I'd like to bring forward for discussion to finally help the CRCA plan a few years into the future and to help the city meet its obligations for funding recreation in Chestermere.
Thank you. So the idea here that Councillor Sambo is bringing forward is to just bring forward this motion and to open it up for debate and then some follow-up conversation after that. So first I will check to see if there, before opening it up for debate, if there are any concerns from council with regards to the wording. This is only for wording. If there's any questions for Councillor Sambo with regards to the wording of her motion. And I would open this up, to both council and administration, just because, just to see if there's anything in there from an administrative standpoint that they may be concerned about. So I'm getting a thumbs up from our CAO. Wording wise from council, this is just wording, not how you want to vote. Any comments about wording? Seeing none. So Councillor Sambo, I'm assuming.
I do. Sorry, I raised my hand. Maybe too late.
Okay, Councillor Warzanowski.
Just a clarification, is this to be aligned with the end of the lease agreement?
Yeah, so the end of their lease agreement is 2029. So then, yeah, it would.
2029's got 365 days in it. Can we pick the date? Is it December 31st? What date is it?
Sure. So we could do that to December 31st, 2029.
Perfect. Thank you.
Okay. Sure. January 1st, 2027 to December 31st, 2029. Does that work, Councillor Sambo? Okay. So, with that then, if there's any other comments with regards to wording, seeing none, Councillor Sambo.
Thank you, Your Worship. I move that Council direct administration to work with the Chestermere Regional Community Association to develop a multi-year funding agreement for the period of January 1st, 2027 to December 31st, 2029.
Thank you. Comments, questions from Council with regards to the motion? Councillor Schindler.
So I'm looking at this motion going, I think this will provide certainly some certainty for the CRCA in their next 4 years of budgeting, or few years of budgeting. And I think that it would show us as good partners and wanting to work with the organizations in our community. So I am fully going to support this motion. Thank you.
Thank you. I just thought of something, and I apologize. I should have done this before. And I would be asking for a change, possibly, depending on what the answer is. So, Mr. Edney, I do have a question for you. If this motion was to pass exactly like it is right now, would that agreement at all have to come back to council for approval, or could administration sign an agreement and it not come back to council for review or approval? Mr. Edney.
Yeah, thank you, Mayor Dean. That's a good question. It would need to come back to council approval unless you put a dollar amount in there right now. So it'll have to come back.
It would not, or it would?
It would.
Okay.
So my plan would be we bring this back for budget discussion. Like
Yep.
we have this sometime in the fall because there's going to be a dollar figure associated with each of those years that isn't approved unless you were to put that in there now. And in that case, you're not really working with them. So
No, sorry.
Yeah.
My point on it is for myself. I would like to see this come back to
Oh, yeah,
council,
yeah.
and so it's been a long day. I apologize. Just confirming the way this motion is worded right now. If it is approved, this agreement for it to take effect would have to come back to council.
correct.
Thank you, Councillor Warzanowski.
Yeah, thank you, Mayor Dean. Along the same lines, I'm curious. I mean, January 1st, 2027 is not far away. When do we want this agreement in place? Is it prior to January 1st, 2027? Maybe that question's to you, Councillor Sam, but what's the intention? If we're going to be planning 2 years in advance, when is the agreement expected to come back to council? And should we date stamp this?
Councillor Sambo.
Thank you, Your Worship. I suppose because it says for the period of 2027 to 2029, I would assume that it would need to come back to council with enough time to implement it by January 1st. So I wouldn't see that as an issue. My reasoning was it would be really challenging to get something in place for this budget cycle, given that it is already April 22nd. But for next year, we could get something going.
Thank you. Okay. With that, any other comments, questions with regards to the motion? Councillor Randhawa.
Thank you, Your Worship. I just need to ask to the administration, is that enough time? So is that okay for January 1st, 2027? Because I just need a yes from you before we can timestamp.
Mr. Edney?
Yes, from our side, this should be enough. I think it will depend on collaboration from the CRCA and their responsiveness to this request.
Valid point. Thank you. Councillor Grant?
Thank you, Mayor Dean. I would also like to suggest to administration that the REC committee has developed a community partnership framework that kind of stipulates some of the expectations. Maybe that, I don't think we presented it to council and has it been approved yet. I don't know if that would hold up this process, but I would like to find a way to incorporate that document. There's a lot of good work done in there that would be valuable to this exercise.
What I would say to that is that has to come to council. Committees don't approve anything, right? And so it's got to come to council. Council debates it. They could add language, take away language, approve it just as is. But for that to happen, that has to come to a council meeting, and it has to be a council meeting, not a GAP meeting. Councillor Grant?
I guess my question to council then is how important do we feel a framework like that would be to this process?
Yeah, I think it can certainly be a part of it, and I see this as an ongoing conversation. And so my encouragement to the three councillors that sit on that committee is that if we feel like this should be a part of that, let's make sure that we are, sounds weird because I'm going to talk about myself this way, that we're reaching out to the office of the mayor as through the agenda prep process, and let's get that onto an agenda real quick, because we know some of our agendas are filling up really quickly as you get sent them all every week. So let's get that as quickly as possible onto an agenda, and also respecting the internal process of staff as to when they have to have reports ready. So right now, given everything I just said, I believe that the earliest that may end up on agenda is the end of May. And so that is something that we just need to have that come forward. Okay. Any other comments, questions from council with regards to the motion? Okay, with that, we'll call for the vote. Councilor Warzanowski, do you vote in favor?
Yes, I vote in favor.
Thank you. And that motion's carried unanimously. Thank you. Sorry, Councilor Sambo?
Thank you, Your Worship. Given that this motion was for 2027 and to the question that was raised previously, I know a invitation was made to the CRCA to come and present in conjunction with the intended funding for them this year, knowing, of course, the final budget hasn't been approved. Where are we at on that? Or Do we have a note on when they're coming for their presentation?
Mr. Edney?
Yeah, thank you, Mayor Dean. To Councillor Sandbo, so I sent an original email to them on January 8th after we had our discussion of having them come present. I did get a response at that time that they would work, management would work with the board to put something together. Subsequently, we followed up, but they haven't been quite ready to present yet, so I don't have a time. I know Charity reached out last week before she left again and didn't get a formal time from them, so I'll reach out to Mike again here this week and try to get him scheduled for one of our upcoming meetings.
Along, subsequent to that, I believe right now in the interim budget, there was approval for a dollar amount to be going to the CRCA for this year. Is that correct?
That's correct.
And I think one of the questions that we wanted to be able to just address and have conversation is similar to the vast majority of other organizations that we work with, including conversations that we had yesterday with the approval of the with the accepting of information for what was done by the Grant Adjudication Committee and the awarding of grants in terms of the reporting and things like that happened. So I'm wondering if there's opportunity for council through the Office of the Mayor to support this work. And I'm wondering if there could be an idea of assisting that perhaps, I don't want to presume anything, but I wonder if there's a way to help guide the focus of what that presentation could be. And so I'm wondering about an idea of a letter, a motion coming from council for the mayor to write a letter to the CRCA, basically with an announcement of the amount of money that could be approved in the budget when it is approved for the CRCA. And then that money will be awarded, if you will, on the day of their presentation. We do a check presentation, could do a photo op, but at the same time, that their presentation kind of be focused around the idea similar to what we do with other groups about how the money from the city of Chestermere will be utilized by said organization in the 2026 period. So I think that's been part of the intention of what we were wanting to look at. I think that this has come up at multiple committees, actually. The idea of how is everyone following the same process? So this would still be a little bit outside of that process. But council, I'm just wondering some ideas on how you feel with regards to that methodology on moving forward with the CRCA for 2026. Councillor Sambo.
Thank you, Your Worship. I'll start since it was my query. I think that makes sense. I think that absolutely does make sense, and it gives some clarity to the CRCA as well that, yes, whatever amount is approved has been approved, and let's talk about it. I think that would also set some good groundwork for the multi-year funding that we've just voted in favor of supporting.
Thank you. Any other comments, questions from council with regards to that? And sorry, I'm just writing said motion on the fly here, if you will. Any other comments, questions from council with regards to this idea? Councillor Schindler.
Yeah, I just want to echo that. I think, and what I said before, I think this demonstrates that we're a welcoming partner in recreation in Chestermere and in various organizations around Chestermere. So I think this is a good idea.
Thank you. Sorry, I apologize.
No. Watch this drive.
Yeah, in my truck on the way home.
Yeah.
Okay. Josh, I'm going to rely on your incredibly amazing typing skills here. So motion to direct the mayor to write a letter to the Chestermere Regional Community Association outlining the amount of money being allocated to the CRCA for 2026 and re-inviting them to do a presentation for council on how the money could be utilized in 2026. Yes. So I would put, after the first time we say, I would bracket CRCA. Thank you. Okay, council, open up the opportunity for any comments or questions with regards to, first I'll go to administration. Administration, is there any concerns that you have with the wording of the motion? Seeing no from CAO. Seeing nothing from Ledge Services, so I think we're okay. Council, any concerns with the wording of the motion? Okay, seeing none. Do I have a councillor that would like to make the following motion then, please? Councillor Randall.
Thank you, Your Worship. I move that the council direct the mayor to write a letter to the Chestermere Regional Community Association, CRCA, outlining the amount of money being allocated to the CRCA for 2026 and re-inviting them to do presentation for a council on how the money could be utilized for 2026.
Thank you. Thank you. Comments, questions from council? Seeing none, call for the vote. Sorry, Councillor Worzanowski, did you vote in favor?
Yes, I vote in favor.
Thank you. And that's carried unanimously. Thank you. Okay, Councillor Sambo, since we had started there with you, is there any other item for yourself right now that you personally want to address? Seeing shaking head saying no. I would open it up to any other councillor. So I believe, first of all, Mr. Edney, are you wanting us to work off of this? Can you just re-explain what this slide is so that we know what we are talking about, Mr. Edney?
Yeah, thank you, Mayor Dean. So yes, this slide is the changes that changed from the interim operating budget. So it doesn't preclude you from going back to anything that was in the interim operating budget and making a different decision at this point. This is just to highlight everything that was in that interim budget you approved. These are the changes that have been made since. Yeah, if we could walk through item by item, decide what you want to do. Some of these, we don't have a choice, like WCB premiums, we have to pay WCB. So we could go line by line if you want, or we could open it up to council if there's anything that strikes your eye that shouldn't be in there.
I don't want to go line by line necessarily, but could you do exactly what you just did, though, can you just remind council and public, what are the ones that are basically non-negotiable at this point? For example, I see on here missed at interim budget, things like that. So can you just go through for us so that we don't spend time talking about those? Are there ones on here that are non-negotiable? They have to stay and we have to figure out a way to put them into the budget. I don't know if that's going to Mr. Edney or Mr. Shunkin, but I just want to open up that opportunity.
So I can take that one because I think it's an easier way to potentially actually say, I really only believe the ones that would be arbitrary would be the addition of another plan or two in Mr. Chandiok's group to help with the workload. If I started from the top, I know we have some conversations around Rocky View Handibus. We could potentially look at that, but again, we're down the road of we've got 4 months of service already from them. So I'd have to report back on whether that could be changed or not. Max Purple Transit, we have a contract with the City of Calgary. The Lake and Watershed Management Report was previously approved in a council motion. The property assessment services we have to do. WC premiums we have to pay. And again, overtime, whether we budget for it or not, we incur it in our protective services department. So again, I don't think that's discretionary. The planner 2 could be discretionary, although Mr. Chandiok would argue intensely with me that it is not discretionary and that that is a service he needs in his group. The events operating budget, I believe we went through that separately in detail with council motion. So that was the additions that was held, I guess, in the interim budget to move forward with everything council's wanted. Fuel cost, again, whether we budget for it or not, we're privy to the events of the world, and we need to fill our vehicles to perform our services. The criminal record checks is something that council discussed previously of just covering that cost for council committees. So really, at the end of the day, as I've worked through this, I think there's only one discretionary item from my point of view, and that's that planner 2, as well as the $20,000 for the park seasonal staff that I had mentioned earlier, just to do the unstructured rec components with the mobile playground, the mobile skate park, and a couple of the other initiatives.
Thank you. With that, before we do that, I actually, with regards to the Handibus, I'd like to have a motion, please. Rocky View Handibus. Council go into closed session. At it'll be 4:16 by the time 4:15 works, to discuss the following: Rocky View Handibus, Access to Information Act, Section 19, disclosure harmful to business interests of a third party. Thank you. Can I have a councillor make the following motion, please? Councillor Randhawa.
Thank you, Your Worship. I move that the council move into closed session at 4:15 p.m. to discuss the following: Rocky View Handibus Bus Access to Information Act ATIA Section 29, disclosure harmful to business interest of a third party.
Thank you. Call for the vote. Councillor Worzanowski, did you vote in favor?
Yes, I vote in favor.
Thank you. Councillor Sambo? Thank you. Oh, mine didn't light up either. Here we go. And that's carried unanimously. Thank you. Good afternoon, everyone. Just coming back from our closed session here. Can I have a counselor make the motion to come out of closed session, please? Counselor Schindler.
I move that council come out of closed session at 4:29 p.m.
Thank you. Call for the vote. Counselor Wozinowski, do you vote in favor?
Yes, I vote in favor.
Thank you. And that's carried unanimously. Thank you. As for our procedural bylaw, take a quick 5-minute break. We'll come back at 4:35. Thank you. Good afternoon, everyone. We're coming back from our final break here, and given the hour and knowing that we're going to be continuing this conversation tomorrow, we're actually going to adjourn our meeting. So, Councilor Randhawa, can we get the motion to adjourn the meeting, please?
Thank you, Your Worship. I move that the council adjourn the meeting at 4:37 p.m.
Comments, questions from council? Councilor Warzanowski, do you vote in favor? Call for the vote.
Yes, I vote in favor.
Thank you. And that's carried unanimously. Thank you, everybody. See you tomorrow.